Hey guys, hopefully you can all hear me. Just letting everyone into the room. Hey guys, how's it going? Let's get you all in.
Hey, what's poppin', Matt?
Hey, how's it going, mate?
What are you doing? I'm fine. What about you?
What's up, man?
Yeah, not too bad. How's it going? How's it going? Just letting everybody in. It's a decent amount of people in tonight. Should probably try and get rid of this waiting room thing for next time because it's going to be a pain in the ass. Having to keep letting everyone in manually, but
Yeah, you can do that immediately. And this, I think, where is it? There is an option in the settings tab.
yeah, I think I've seen it before, but I think I'll have to do it before the meeting starts. I'm not sure if I can do it during, but it should be all right.
I think you can do it now, but I don't see it because
Okay.
I'm not the host. It's like in the pop-up thing.
Yeah.
Yeah, I think.
Just give it a couple more minutes just to let a few more people trickle in, and then we'll hop on the charts and try and nail this market structure once and for all. Yeah. How's everyone's week going so far? We're only one day in, but
I totally milked the market today.
yeah.
I don't know what today was like the best day in a few months now.
Or is that on euro dollar?
Oh yeah.
I got all my analysis right, but yeah, it's just basically I just want to nail market structure before I do anything else.
Yeah, it's honestly so key to nail. Like, even if you have like experience with a lot of the other concepts like supply and demand and whatnot, I'm hesitant to go on a rant about market structure because I do it so much, and in the course you have to sit through, probably listen to me rant about it. I don't want to rant about it too much here. I think you guys are all pretty much bought into the idea of how important it is. So,
I mean, that's the whole reason why I joined the course, literally because, you know, I think I messaged you, didn't I, on I sent a message on your YouTube saying like, this is amazing, like, you know, the video,
yeah.
And then I joined the course, but just watching that, I literally made 4% in one, like, but even then I'm just like, nah, this can't be like this. I've just got to nail a little bit more. Like today on pound USD, that's my favorite pair. I literally like 1.3 pip stop from a sell at New York. I took the trade, and then after I'd done 20 pips or whatever, I closed it because I just thought I need to watch this session today and before I make my mind up about how I'm going to trade it.
0.3 pip on pound dollar is pretty impressive. That's high. Like I usually don't go below three on a pound dollar, but yeah.
But I think I was just being very, very like I was just waiting for sweeps and for it not to break any more highs, and I was being very, very like systematic about it. But that was only because I've watched a little bit of the market structure, nothing else. Do you know what I mean? So
yeah,
I'm gonna wait.
Yeah. Now pound dollar's good. When you catch it and it goes, it just flies. So it's always a pair of being tempted back into trading. But yeah, just the last few months I've just kept it really simple. Just focus on euro dollar, and I've just made my life just a lot easier and more enjoyable, really, than trying to kind of split my focus between multiple pairs. But yeah, no, pound dollar is decent if you can nail it. Just have to be really on the ball with how much it likes to sweep liquidity, sweep highs, and come back to those extreme zones before it makes that real move. Whereas euro dollar is, sorry, go on.
No, go on, sorry, go on, let you finish.
I was just gonna say, yeah, euro dollar is a little bit more, I don't want to say simple, but yeah, it's just, it doesn't tend to liquidity is not as big as a role, I find. It can, like, react from, what we call the decisional supply zones or demand zones, where it doesn't pull back to the extreme. Whereas pound dollar, yeah, I just found when I traded it, you had to be a lot more patient and wait for price to come to those extreme moves before it would really give you the move that you want to catch. But yeah. Sweet. I think that's probably the majority of people in. We've got decent attendance tonight. So yeah, what I'll do is, bear with me 1 second, I want to share my training view screen. Cool. So can you guys all see my screen pretty well? Anyone just give me a shout or a thumbs up or something?
Yeah.
Oh yeah, looks
Yeah, you
clear to
see
me
it.
now.
Wait, cool. All right, I'm going to try my best to keep my one eye on the chat whilst I go through this. Obviously, for some of you guys that have your microphones, if you have any questions, come in. So yeah, unless some of you guys have already been in the Zoom meetup or watched the last one, kind of the format for these are very, very informal. The best way I found it is if you guys have any questions at any point, or I'm explaining something that doesn't feel clear enough, you need me to slow down or whatever, the best thing to do is actually just shout over me, interrupt me. Don't worry, it's not rude. It's just the easiest way to do this. So obviously, I want to make this, rather than kind of just a general Q&A like we usually do it, I want to make this kind of main focus on market structure. We might bring in a little bit of supply and demand and look at some entries and stuff towards the end, but I want to keep this very, very simple. And really just go over the stuff that we look at purely in the market structure module, but in just a lot more depth. Obviously spend all this time going through bar replay pretty much on walkthroughs, because I was having to think what would be the best way to kind of go through this other than what I've already done in the course. Like, I was going to kind of do a bit of a not presentation, but kind of, a few little mini lessons here. But I think the easiest way to kind of, instead of trying to jump through and try and find different examples, is we'll just do bar replay. We'll go back to a random bit in price action, and we'll just play it forward and literally map market structure the way that I do it in the course, the way that I do it in my own trading live time. And you can guys hear my thought process. And there will, I'm sure, be bits where price action comes up where it's a little bit confusing, it's a little bit messy. And I think that's where a lot of questions will come up. And that's where we can slowly work our way through that. One thing I was going to try before we hop into that is, can you guys, I don't know if it's possible on Zoom, somehow draw on the screen? Can you all just draw a random scribble?
Yeah,
See
we
if
can.
see if you can draw.
Yeah.
Yeah. Does everyone know how to do that?
Everyone.
It looks like sweet. It looks like you all know how to do that. The only thing I don't know how to do is delete your drawings when you do it. But okay,
No,
if you guys delete it,
you
sorry?
can't. You
I
can't.
can't, okay.
Redraw.
Okay,
We can draw like your complete screen, and you cannot do anything about it.
Okay.
But I
All
have,
right.
before you start, I have, I don't know if you want to hear it, but I have found a concept where you can identify the market structure like the most technical it could be. I found out that if you like try to map market structure on the H4, so you need H4 highs and lows, swing highs and lows, you can do that on like daily aggressive structure. I back tested it and it worked like, I don't know, 99%, I think.
Are you saying that daily internal structure is the
Not
4-hour swing structure?
structure, but like the concept of the change of character where you look like at the wicks and stuff like that.
Yeah.
If you hop on to the daily, I can show you in like 1 second, zoom a little bit in. So this, for example, is 100% a low on the H4. And like this got broken, so this is the high. And then you look like at the wicks, and if one wick is like this one higher than the previous one, this is our low and this is the high. And this works like on the, if you need the H4 swing structure, you do it on the daily. If you need the 15-minute swing structure, it is the 1 hour chart.
Okay, I'm gonna look. Let's just keep it simple. Let's just follow. I appreciate you found something that works for you, and that's cool.
Yeah,
but just I don't want to confuse people anymore than maybe what they already are. I kind of want to stick to the the method that I use and the method that I teach in the course.
Yeah, sure.
Yeah, and we'll roll through that in the webinar. But yeah, we can have a chat about that later towards the end. Like I said, like I'm always, I think I talk about this in the course a lot. Keen for you guys to develop ways that make sense to you. Use whatever you can. Just as long as you test it, you have data to back it up. It makes sense. There you go. You have your edge in the market, right? So I'm all for that. But yeah, just for the purpose of this video, let's try and keep things simple. Can you guys try and just delete your squiggly lines that you've got on the chart if possible? I don't know who these red lines are. But anyway, so do you guys know how to delete them?
just if everyone just presses clear, then you'll know who it is.
Sweet. Cool. So basically, it's just going to start with a little interactive exercise with this bit of price action here. I've done a bearish model for once because I always do a bullish one, but very simply, can you guys draw on where the swing breaks of structure are? Where you think they are? So not the swing range, but the swing breaks of structure. Okay, interesting. So the majority have you right. I guess, I mean, I tried to make it obvious that these big swings in price for me are the swing points, and these little moves are more of the internal structure. Okay, so if you guys delete your lines for a second, what I'll draw on is, which is where the two swing points for me are here, and then we have this bottom one here. Okay, so it would have been a little bit easier probably if I put on the highlighter tool just to show us where the actual true swing points in the market are. The way I was viewing it, but essentially we have that high and then down to this low. Okay, so this is our breaks of structure, right? We have a swing pullback. We then break that low, that swing low there. Now, when we pull back here, this is just essentially, you know, a small high, a minor high, fractal high, whatever you want to call it. That's just a very, very small pullback. It's not a swing pullback. Okay, so this is the break of structure down here. That is not a swing break of structure to the upside. Okay, because when price pulls back at this point, we are trading within this swing high here and this swing low here. So and then once price comes down and breaks it, that is our next swing break of structure. Okay, so then obviously when we get that break of structure here, we look back to see where is the highest point that broke the low, that broke this low after the low formed, right? Yeah, exactly where AJ put it. So another simple tool you can use is if you draw a box from where the low was to where it was broken, and then just draw it upwards like that, you basically want to find the highest point within that box, and that will give you where your swing high then becomes. Okay, so this is then the highest point that we want to break the swing low. So it seems very easy when it's in a simple case like this, but there are times where structure can get complex, especially when we bring you know, wicks into it and whatnot. So this is just why it's drawing a box like this can be very, very useful. Okay, cool. So we know where our swing highs are and our swing lows are. We know where our two swings or breaks of structure are. Can you guys now draw on a horizontal line where you see the changes of character on this price action model? So just draw a horizontal line where you see the changes of character. Yeah, you've all pretty much got that right. So I know some of you like to mark out the break of the high that then breaks the low. Yeah, if you guys can just delete your lines, that would be good. Which is cool if you do that. I just try to like keep it simple and I only mark where the actual change of character is. So for me, if I get the line, if you guys can try and delete your lines if possible, just to clear things up a little bit. I'll make this a dash line. So this is a change of character and this is a change of character here, okay? Because we have our swing points, right? So this is our swing high and this is our swing low. So everything between the swing high and the swing low, I basically just tried to simplify and I just refer to all of that as internal structure. So any highs or lows, but that isn't a swing high or isn't a swing low, I just keep it simple again and I just refer to it as internal structure. Some of you might be used to calling that minor structure, substructure, etc. That's all fine, it's relevant, but for the purpose of this, I'm just, again, keeping it really simple. Let's just refer to everything that's not a swing high or low is internal structure. So when we have these two swing points and price moves to the downside, and then we get a movement up and price takes out this small high here, that for me is a bullish change of character, because essentially it's the first time after this price take where we have a higher high form. So we have a minor lower low, a minor lower high, and then it continues up, sorry, it continues down. And then when we get a break of that most recent internal high, that now becomes our bullish change of character, okay? So then what continues to happen is this internal price action. So remember, everything between this swing high and this swing low is internal price action. We then make an internal higher high by getting our bullish change of character here. And then we continue to make a series of internal highs and higher lows, right? Higher high, higher low, higher high. And then what happens? Then we come down and then we take out that internal higher low to make an internal lower low, okay? So that's why these two lines, we got rid of these orange lines. This line here was the bullish change of character. I don't bother drawing on anything else because it stays bullish. The internal price action stays bullish, right? Within our bearish swing range. So the swing trend is bearish the entire time. But once we get that bullish change of character here, the internal price action switches bullish to facilitate that pullback, that swing pullback. okay, then I don't bother really marking on anything else until what? Until we get a bearish change of character, which is when that internal high low gets taken out to form a lower low, okay? So at this point, when we get our bearish change of character, the internal structure has now aligned with the overall swing structure, okay? Because the internal structure has to switch bullish for the price to pull back. And then once we get a bearish change of character, now the internal structure has now aligned with the overall swing structure, okay? So in theory, that gives us a good signal that this pullback is now over and we're now ready to come down and target this weak low, okay? The weak swing low. Why is this a weak swing low? It's a weak low because we start to anticipate at that point that it has failed to do its job because it's failed to take out the high, okay? So once we get that bearish change of character, it gives us a signal, not a guarantee, that the pullback is now finished and we're now ready to go on and target that weak swing low, okay? So one thing I want to try and make very, very clear is that change of character, it's just one tiny piece of confluence that we use amongst everything else within the concept supply and demand, premium and discount, liquidity concepts, etc. But it's one of the first things we look at just because we're trying to nail structure, right? We're trying to nail where our swing points and then how to basically anticipate when those swing pullbacks may be finished and when the next swing run may be starting by looking at when the internal structure realigns itself with the overall swing structure, okay? So obviously in these perfect utopian examples that we look at when we look at the theory, it seems quite simple because, okay, price moves to the downside, we get a break of structure. What do we expect after break of structure? We expect a pullback. How can we anticipate that pullback? We wait for a bullish change of character, okay, when the small internal high gets taken. Once we get that bullish change of character, okay, now we have good confirmation that the pullback is in fact happening, okay, because trying to let people in and get rid of that waiting room for next time. But yeah, get rid of these lines, hang on. So yeah, so when we get that bullish change of character, it's a good signal that the pullback may be happening because obviously what could happen is price could just come up and it could keep trickling like this for ages, right, until we get that pullback. So this basically gives us a good signal that it's happening. And then once we then get another bearish change of character, it gives us a good signal that the pullback's over and we could be going. But in reality, as you guys have probably started to see now in the live market, if you start marking on changes of character, especially the last few weeks where price has just been stuck in a massive 4-hour bearish range, these happen all the time. So you can get a nice pullback like this, then we could get a bearish change of character, but then price could come back up and then we could get another bullish change of character, right? And then price could come back down and then we get another bearish change of character, right? And it can keep happening. And that's obviously when it gets a little bit confusing. Hang on a second, these people in the room. So yeah, so obviously that's when we start to pair it with loads of other confluence, such as supply and demand. Like I was saying, hang on a second. This waiting room is doing my nutting. I should have sorted this out before we got there. But yeah, we'll hop on the charts now and we'll kind of go through some examples, and you can see really how we do this. But the one thing I want to drive home, because I know a lot of you probably understand now how to mark this on your charts, but then when you're applying it to the live charts, you're going, well, hang on, we've now had our bearish change of character, the internal structures aligned. Why aren't we going for the low? Why are we still chopping around? And it's just one very loose bit of confluence that only really becomes powerful when we pair it with everything else. Let me just put up this window. Okay, cool. So is there any questions around that, but kind of before we move on to looking at the live price action?
I think Jakova wants to ask a question, but his mic's not working.
Okay, yeah, go on, Jakova. If you can type it in, that'd be the easiest thing. Just feel, don't ask permission to type the question, just put it in there, and when I see it, I can get to it. I'm just going to see if I can open up the room. Right, okay, cool. I think everyone's in that wants to be in. Yeah, draw it on the charts. If anyone who's already drawn your lines on the charts, can you try and delete it if possible, whoever's those brown lines are, just to try and keep the chart a little bit clear. Ooh.
To be fair, like, I'm not even that bothered about the fight. I actually end. Just feel like we ain't been down. I don't think we've been down this like a month, A month, how long ago that is? It'd be nice to get to go there for one night, chill. Like, smoke up inside, ping pong. It's just so, it's actually so calm every time we go.
So who's that speaking? It's quite hard to understand what you're saying.
Max SH.
My bad. I didn't know it was on. My bad.
Just mute yourself if you haven't got a question, please. Okay, Jacoby, yeah, you're drawing this. Why that red line is not a valid structure? Okay, so this is a good question. Something that has come up quite a bit. So essentially, because you've drawn price action like this, right? This movement here, I'm going to draw now, that it's a straight movement down. Okay, so in your drawing, there's no high there, right? It's just one straight clean push. So even though this could be your swing high and this is your swing low, there's no, there was a little line down here like this. Then when price moves back up, right, we would have that bullish change of character. But because this is a straight push down and there's no high there, what that means is then both your swing high and your swing low are also your internal high and your internal low. Okay. Is that we did small pause and you had got it. Yeah. So basically, because it's a straight push, when this price pulls back, technically it hasn't actually, this is what some people call substructure. I don't want to get too bogged down on this, but essentially it's because it hasn't broken anything on the way up. So both the swing structure and the internal structure are both bearish at this point. Now that said, okay, that doesn't mean that you can't understand and read what's going on here, because let's say, right, the price has come into a nice supply zone up here, right? Now, you might still, for whatever reason, might not want to just get short here, and you might want to wait for structure to shift in your favor and show a bit more bearish price action, and that's fine. You could wait for a move like this and wait for that low to go there. It's just for the kind of the purposes of the question you're asking me. Technically, it isn't a change of character, because for there to be a change of character, price would have to break this orange line at this point, because that is the active internal high and the inactive internal low, which, kind of based on your diagram is in the same place. So basically, in your case, the bullish change of character is the start of an internal uptrend, which then the bearish change of character changes to a downtrend. Yeah, essentially. But hopefully you can understand why I'm just saying, technically this isn't the change of character, because it's just yeah, exactly. So without that first bullish change of character you had that we contained with the internal low and high. Yeah. So to kind of draw an example beside you, I appreciate this is kind of getting a little bit messy now. If I maybe move this out of the way. It'd be really good if whoever drew these lines could delete them. I'm not sure how to figure out how to do that yet, but essentially, I think I drew this in the questions channel in the Discord if you didn't get to see it. But if you have a similar price action to yours, but then there's a little low like this, right? If price then comes up and then gives us, then we have that bullish change of character. Okay, so when price comes up here and then comes down, all right, I'm going to delete this over here because this is. Is there a way? Does anyone know how I can delete these drawings?
If everyone
Matt,
if you click on
Matt, if you click
there
on
we go.
view
I figured it out.
if you click on view options at the top, click on annotate, and there'll be an option saying clear all drawings.
I've got it. Cheers, mate. Thank you. Sorry, it's the first time I've done this with Zoom, so I'm just feel like an 8-year-old grandma trying to figure it all out. But there we go. Okay, cool. So, right, cool. So let me just do this once before, and then we'll hop on the price action. So essentially, the thing you were looking at, right, was a movement like this, and then we come back up, and then you're basically saying why this break here isn't a change of character. And for the purposes of the way we're looking at things, it isn't, simply because price is trading within this low and this high. Because this was a straight push, when price pulls back, it hasn't broken anything structure. That hasn't broken any structure. There is no structure in this leg for price to break. Okay, so this could be your swing high and this could be your swing low, but it would also be your internal high and your internal low. Okay, now when price comes up here, and then it breaks this low, it's still significant, right? You can still view it as useful information, like I was trying to say earlier, because price could have come up into the supply zone for whatever reason. Maybe you weren't sure, you want to wait for a little bit more confirmation. You can still wait for this low to go. It's just technically not the change of character in the way that we're looking at it. Okay, so I'm trying to think of what a better name would be for this. Maybe you want to call it a substructured chalk and internal of internal chalk. You see it with all these definitions, it just gets a bit, icky. But yeah, hopefully that makes sense. Whereas if you had something like this, but pretty much the exact same thing, but on the way down there was just a tiny piece of structure like that. Now when price comes back up and comes into here, and then we get the break of structure, right? Because we had that bullish change of character here, that now means our active internal high and low is here, right? Then we get another break, so our active internal high and low is here. But obviously we get another break, so our active internal high and low is here, and then price moves down, and this line here is then our change of character. But it's all because it broke something on the way up. So the internal structure at this point here switched bullish, right? Because there was a lower high for it to take out to then form that internal higher high. But at this point, when price pulls back up, the internal structure is still bearish because it doesn't break any highs, right? This is the active internal lower high. This is the internal active lower low. God, all these words are just getting ridiculous now. But yeah, hopefully you guys can see why that isn't, you know, truly a change of character, but you can still use this as information, okay? It's just not, you know, the true internal chalk, whatever you want to call it, right? It just gets a bit silly now. But would you use substructure breaks as hints of changes in such situation when chalk would be on the same level as boss? Yeah, exactly. So it's technically not a chalk like I was saying, but you can still use this as information, right? It's still useful because it's still a form of a break of structure. It's just not, whilst I'm trying to teach you guys where the change of character is, it's technically not where the change of character is, okay? And the reason why that is because let's say, right, price, I'm trying to think of an example. Price is, all right, moving to the upside, okay? And then we come into, let's say this is the most amazing supply zone ever, but you want to wait for a change of character, right? Price falls back and it comes up like this, and then we get a break of this low, okay? All right, so then imagine this is like the strongest supply zone in the world. We love it when we want to get short. We see price has popped down and like come into this supply zone here. Now, if we have this here, right? And then I draw another example. Okay. Bear with me. Out of these two examples, yeah, cool. So they're both basically identical. They both come into the same decent supply zone. Hopefully you guys can see that. Which one of these, left or right, do you think is going to have the highest probability of playing out if you were to short from these supply zones here, right? Would it be the first one or would it be the second one? Would you prefer to short from? You guys either want to shout out or just draw on would be the easiest.
Right.
Yeah. So then pretty much all of you have gone for the right. And the reason why that is because if I get my little handy annotations thing out, cool, is because, hopefully you guys can see us now, is because we've had a change of character first, right? Because we actually broke some structure. Whereas this movement up here, right, we've just had a pullback. So whilst this movement here is technically, this orange line is technically a form of a break of structure, right? It's a low that was broken. This is what essentially I used to call substructure, right? I've got rid of that from the course and tried to simplify things. But the reason why is because this is just a pullback, right? It hasn't actually broken any structure because this is one straight push up. So the active internal high and the active internal low will be somewhere down here, okay? So this is just a pullback. Now, this is still useful information. It's still a low being taken out and you can short from here and this can play out. But we have to be aware of is this is just a pullback. And if you're getting short from here, it's very likely that price is just going to come up and smash through you because this is a form. Basically what's happened is price has broke a low that is it's a very weak low. It did not achieve anything, right? It pushed price up and price continued down. It never took out this high. Okay, so that's why this would not be, you know, a change of character. There's no change of character here. Whereas over here, what we've had is we've had a movement up, we've had a pullback, we've had a movement up, and then price has come down and taken out that low, right? So we've had a bearish change of character because it's taken out a low, right, that caused an internal high, right? So now with structure has actually shifted because we had bullish internal structure and now we have bearish internal structure, right? So now when price comes back up, you're actually trading, you know, essentially in line with that bearish internal structure now. And this is a lot more significant. So this is why this becomes, you want to see that true change of character, whereas, you know, technically, you know, this is not good basically. So that's why a lot of times I'm seeing people, you know, essentially have that exact example where prices come up into a supply zone, it's pulled back a little bit, and then they see a break of that low here, and then they want to get short right on this high here, but there has been no change of character, and then they get smashed like that, and then price goes up higher, right? That's essentially where we get that liquidity sweep, right? Because we sweep these highs here, we get a deeper mitigation, then price comes down and takes out the low that had caused the high. Okay, so now, right, this is a significant low because it actually caused the high. This here then is our change of character, right? This line here, that's our change of character. So now when we come back in, that is higher probability. And that's often why you see that price actually, when price first comes into a zone, because, you know, yeah, that first high, basically, that first mitigation, is generally just having a pullback like this. People are getting short on these lower highs here, and then they're wondering why they get smashed, right? All of that liquidity gets swept. We then have another this is then becomes our active internal low, right? Our most recent low that took out the high. And then that's the low we want to see for our change of character come in, right? And then boom, we can get short here and then trade that short. Okay, so you have to be really careful with that.
That's where you hear the term, if it doesn't sweep liquidity, you are the liquidity.
Yeah, essentially. If you can't find the liquidity, you are the liquidity, you know, something along those lines. Yeah, during that. Now that's not to say that something like this can't play out, right? If you were to come into here, you just have to manage your expectations that you're really just playing a pullback, right? And at any point that can go up, okay? So if you are going to trade essentially these substructure breaks, you need to be pairing it with a hell of a lot of confidence. And I would just say don't even bother, keep it mechanical, and wait for that structure break. So is it, just get some of these questions, is it as simple as without breaking internal high and internal low? Yes, essentially. So remember, you want, for a change of character, right? I don't know why it's not working for me. You need to be marking it on a low that caused a high in a bullish market, right? I think if we go through price action on the charts, it'll become a lot simpler. And yeah, Peter, would the right one be considered flip? It would be if price flips. So I think what you were referring to is, right, essentially had this drawn, right, and then we get a break of the high. So then this becomes our low. I don't know why prices are squiggly. I think it's because I'm too zoomed in on the chart. But essentially, what you would want to see then is price come into this level here where there's demand. I don't want to get too caught up in supply and demand. I want to focus on structure. But yeah, you would see a reaction from that demand, but it would fail to make a higher high. Supply would then come in, right? So now you have our change of character. We then have our flip, right? Because demand reacted and it failed to form a high. That becomes our flip zone. And that's essentially what we look for. That's the entry model, right? We come into a nice supply zone up here. We sweep the liquidity, right? We come into demand. We try to make a high. Demand fails to do its job. Supply takes control. Supply pushes down. And structure has shifted in our favor because now that internal structure, all the swing structure has switched bearish. So boom, change of character tells us when we can enter because we've waited for it to shift in our favor. The flip shows us where we can enter, right? So we enter on the flip rather than it's necessarily going to come up to the extreme, okay? But anyway, I don't want to get too caught up in that for now. Let's just focus on, doing this on the charts. I think it'll become a bit more clearer, hopefully. So, tell you what, a lot of you guys are probably quite familiar with the 4-hour structures. Let's jump down to the 15. Let's go back a little bit to where, I don't know, maybe over here or something. So what we're going to do, I think for now, especially for this Zoom call, maybe we'll do on the next one, we'll go on to more multi-time frame, but let's keep it very simple. Let's focus on just one time frame, okay? And first of all, I think, just thinking out loud, yeah, let's just literally do it, bar replay, and I'm going to map on both swing structure and internal structure, and we're just going to talk through like the exact process we need to go through. So let's go, let's start from the top as we're trending to the upside, okay? So what I'm going to do is I'm going to use essentially a 15 pip rule, okay? So we're on Eurodollar on the 15-minute time frame. We're just going to say if it's a 15 pip pullback, that will count as swing structure, okay? So what I would literally do in the live market, if I was looking at this right and I had a completely blank chart, the first thing I want to know is where is my swing high and where is my swing low, okay? So what I would do is go, is this significant enough of a pullback, right, for it to be swing structure? Well, let's measure it. If I'm using a 15 pip rule, measure from the high to the low, okay, not quite 15 pips. So let's say that isn't swing structure, okay? Let's mark this one. Was this 15 pips? Not quite. This one should definitely be 15 pips, okay? So that's our swing structure, right? Okay, so what I would do then is go, this is my most recent swing low, okay? I'm just going to put some text on it. Cool. And then just want to make sure we've definitely got this all in the right place. So that was, yeah, 15 pips. Then we went on to break the high. Actually, so this is why I have to paint the story, right? Because I've actually got it in the wrong place because this was a swing breaker structure. And if we look back from that high, where is the lowest point that broke the high? It's not here, right? So this is where you can use that box tool. Yeah, exactly. So if you draw it from the high to where the high was broken, and then you draw it straight down, can you tell whoever that is? Who's that? Can you mute your mic, please, if you're not answering questions? I can't see who that is.
It's either Matt, if you could mute him.
Cool. cheers. Sweet. So yeah, so within this box, this would be the lowest point, okay? So that's actually the swing low once the high goes, okay? So that at that moment is our active internal low, right? Let's draw on highlighter tool so we can make it nice and obvious. All right. Okay, so now we have a break of structure. At that point, let's bring it back to there so we can talk through it, right? So as soon as we get a break of structure, we look back and go, okay, that was our lowest point, okay? So this becomes our active internal swing low. Now we've had a break and close above. So what do we expect after break of structure? We expect a pullback on that time frame. So what are we going to wait for to potentially give us a signal that that pullback is starting? We can wait for a bearish change of character. So at this exact point, the low that I need to see go for there to be a bearish change of character is the most recent low. Yeah, exactly that low there. Okay. So let's put, I'll tell you what, we'll put a little line on there, and this can become our, what I'm going to do is instead of marking out the internal high and low with a line like this, I'm just going to put the like a change of character line there. Okay. Because this is the way that I do it in a live market. I would know where my swing low is and my swing high is, but I would use a dotted line for basically knowing which lower high I need to see be broken with a wick to tell me that internal structure is shifting. Okay. So at this moment, the swing structure is bullish. Okay. We've just made a high. We've closed above the swing high. The internal structure is also bullish. Okay. We've had a straight push up. All of these candles went on to break the prior candle's high. So this is all part of the up move. Okay. So at this point, I would need to see this low get wicked for there to be a bearish change of character. And I would need to see price close below the swing low. Yeah, sure, Jakova, go on. You can type it quickly. So I'm just going to play forward a little bit whilst you ask that question. Okay, go on. So from the swing high to the swing low. There is no. In the previous price action, yeah, there is. So. Yeah, if you just wait, right, wait for me to play price forward, and we'll just go from this point onwards, and you'll get it, right? Don't worry about the previous price action. As long as we know where our swing high and our swing low was, and we know where our active internal low is, which is here, we can play it forward from here. Okay, so cool. Okay, so price is pulling back, nothing to do. Okay, now price is taking a high, right? So what we do is we'll measure this pullback here and go, was this 15 pips? No, it wasn't quite 15 pips, okay? So that is not a swing pullback for me, which means the swing low stays where it is. However, we have pulled back, right? This candle here, right? It failed to break the prior candle's high. So as soon as we get that pullback, I now know that this is essentially my internal high, right? We pull back and then we've taken the high. So now what I'm going to do is I'm going to move my change of character line up to this low here, okay? Because that becomes my most recent active internal low, right? So let's play it forward again. Oops. I don't know why that happened, but yeah. Okay, cool. So price continues up. Now, all of these candles break the prior candle's high. Then this candle here fails to break the prior candle's high. So now we are having that internal pullback, okay? So price falls back. Let's measure it. It's not 15 pips yet. No, so still don't have a swing pullback yet, okay? I would need to see this low go. This low would need to be wicked for there to be a change of character. Still not 15 pips, okay? So it's not quite swing structure for me. Prices stay bullish, the swing structure stay bullish, but we have not yet had a bearish change of character. Have we taken this high yet? Now we've taken this high, okay? So now we've taken this high. This wasn't 15 pips, so it's not swing structure, okay? It's just internal structure. We've now made an internal higher high. So our most recent internal low is this low here, okay? Because all of these candles from this point onwards, they all break the prior candle's high. So that's all part of the up move, okay? All of those candles break the prior candle's high. This candle fails to break the prior candle's high. So this is why this is the most recent low, okay? And this becomes that there, right? All of these break the prior candle's high, right? I think that one does. A high of that candle, if you look at the top left, 68.0, 68.1. So this, yeah, this candle trades 1 micro pip higher than this one, okay? So that's all part of the up move, right? Okay, price pulls back. So this candle fails to take this candle's high, which means we're getting an internal pullback. Okay, then it wicks that high. Definitely wasn't 15 pips, so it's not swing structure. So now again, we move the change of character line up here. So imagine, right? I know we're only looking at structure, but this whole time, if for whatever reason you were looking to trade this short, but in your plan, it says, I'm waiting for that M15 bearish change of character. This is which way you're just sitting on your hands. You might have all of these supply zones, right, that you've looked at, found on the left that might look really great. They might look like flips. They may have broken structure. They may be sweep zones, all of that fancy stuff, right? But until we get that bearish change of character, if this is in your plan, right, if you're waiting for an M15 change of character, this whole time you're just sitting. You can see the price is probably reacting to supply zones, right? And it's pulled back. but we're going to wait for that 15-minute change of character. And that's why those old supply zones, they become reaction points, right, in a bullish trend for price to pull back, but continue to the upside, right, to provide liquidity behind these highs for price to target and fuel the move to upside. I'm getting a little bit ahead of myself here, but I'm just trying to kind of make some of you understand, if you're not sure why, as to why we're so pedantic about understanding this and why it becomes useful later on, right? So at this point, we're still waiting for this M15 bearish change of character. None of these pullbacks here were 15 pips or more. So none of this is swing structure. These are all minor internal pullbacks. Okay, our swing low still remains down here at this point. Swing structure is still bullish, the internal structure is still bullish, okay? So that's an inside bar because it has a white body, right, with the indicator that I use, which means we have now has an internal pullback and we continue to the upside, right? So that means now my active internal low has to move up. It moves to the most recent low that caused the break of that internal high. Okay, so this would be my change of character. Okay, now we pull back, and now we've wicked it. Okay, so that for me is a bearish change of character. All I need to see for a truck is a wick break, right? So now this gives us our first tiny potential signal that we may be getting a swing pullback. Okay, so it's a signal that the pullback may be starting, but it does not confirm that the pullback has yet happened, and it does not tell us that this is a swing high. Okay, in a bullish market, for me to know where my swing high is on Eurodollar on the 15-minute chart, I personally need to see a 15 pip pullback or more. Okay, so until price from this point onwards, right, if price continues to pull back, right, 15 pips to here, once that happens, I will then get my fancy highlighter tool, right, and I will mark that out as my swing high, but only once price has pulled back 15 pips. Okay, all this here has told me is that this is the first time, right, since this low, this is the first time with all of this price action that the internal structure has now switched bearish, because it's the first time that after a series of internal higher highs and higher lows, the internal price action has made that lower low. Okay, so this on its own that we just looked at, it's a very weak signal. It's just one little thing that we're looking at, and we would want to pair this with a hell of a lot more confidence before we would actually think about getting short and trying to anticipate that this pullback is going to happen. Okay, you know, you want to find a really good supply zone that's coming in. You know, we want to see liquidity sweeps, all these things. So we'll get into that further down the line. But right now, basically, we have a bearish change of character. The internal structure is now bearish. Potentially, there might be a pullback. So let's see what happens next. Okay. So now you can see, right, we've gone up and we've wicked the high. So whilst we switched bearish, we've now switched bullish again. The internal structure has now switched bullish again because this high has been broken. Okay, so we had a bearish change character, now we've had a bullish one straight away. And this is why it's such a weak signal and why you have to pair it with a lot more things. Okay, now obviously this is the 15-minute chart as well, and the time that this is at is coming into the daily close. Very often you'll see quite choppy small price movements, and this is where you get a lot of change of characters anyway. But let's not worry about it too much. Let's just continue to map structure just so we can understand how to do it. Okay, so now what's happened, right, with this one candle, and this is where it can get a little bit tricky where price action is quite small, is we had that bearish change of character. At that point, right, our most recent internal high was this high here, because all of these candles broke the prior candle's low. So that's all part of the down move. Okay, so that's why that was a bearish change of character. That then became our active internal high at that point, right? Then price came up and it went up and it took that high and it continued up, right? And then with this one foot candle, it came down and it took out this low. Can everyone see? Wait, has it taken out yet? Not yet. Let's see one more candle. What happens? Okay, so what was the low of this candle? 18723. What's the low of that one? 18723. Okay, so they've actually traded exactly the same price level. So what that means is there actually hasn't been a change of character yet. It hasn't taken out that low. I need to see that low breached by at least one micro pip or pipette, whatever you want to call it. Okay, so hopefully everyone can, you know, shout over if you don't quite understand what's happened here. But essentially that was our low, right? Price took out the low. We look back, where was our high? Our internal high was there, okay? Price then comes up and it wicks that high, so then we get a bullish change of character. If we look back, this was the last candle here, right? To fail to break the prior candle's high. So this becomes our active internal low here. So we draw a line across. Now this candle here trades as low as it, but it does not breach it. Okay, so we don't get a bearish change of character. The internal structure is still bullish at this point. Okay, hopefully that makes sense. Hopefully everyone's with me. Now let's see what happens. Just trading sideways in between that candle. Okay, and now we continue the up move, right? So we've taken this high and we've stayed bullish. The only reason why I'm not going to draw on a line there is because I'm only drawing it on for the changes of character. So I'm only drawing it on when bullish internal structure switches to bearish structure, or when bearish structure switches to bullish structure. Because at this point here, where this last dashed line was, we switched bullish. We haven't switched bearish since then, so I'm not going to draw on another bullish break. Okay, but what I will do is I'll put the line on where the most recent active internal low is exactly, so I can see where that bearish change of character is going to happen. Okay, so when we look back, where's the most recent internal low? It's this inside bar here. Okay, because that was the last candle to fail to break the prior candle's high, right? So that becomes our active internal low there. Just double check that the low is 18734, and so is that one's the same. So trade at the same level. So that is our most recent low that went to break the high. Okay, so when it gets very choppy like this, it can be a little bit confusing, but yeah, hopefully that makes sense. All of these candles have continued to break the prior candle's high. So this is all part of the up move. This is an inside bar, it's a white candle. It failed to break the candle's high, so we're now pulling back. Let's see what happens. Okay, now we continue that up move. See that next candle, it breaks the high. So because that high broke, that means this becomes a low, because this low caused the high, right? Price went on to continue to break that high. Okay, so this becomes our most active internal low. But remember, this entire time, we have not yet had a 15-pip pullback. So this is still our swing low, and this is all part of one swing movement to the upside. We did have a bit of a bearish change of character here, right? Where price shopped around a bit, but then it switched bullish straight away and it continued the up move. So you can see we got a full signal there for the swing pullback. So this price action and no higher high swing. Yeah, so essentially this is forming the higher high, but we don't know where. I'm not going to essentially mark out where my swing high is, because, you know, at this point here, if I had marked out this as my swing high, right, this circle here, I could have gone, yeah, that's my swing high. Well, excuse me, if I mark that as my swing high, well, then that means that now we've had a break of structure, right? So if we've had a swing break of structure, then this would become my swing low, which then means if price had to come down and broken that low, if that had happened, that would have meant that we're bearish. But we're not bearish yet, because this was not a swing pullback, because it wasn't a big enough pullback for me to consider swing structure. And that's why I have that 15-pip rule. And that's why it's so important that you don't mark out where your high is until price moves as far back as whatever it says in your plan, okay? And that's why I have to keep it as mechanical as that, because hopefully that again makes sense. If you had to call that your swing high, right, and then price moved up, well, then that would have to be a swing break of structure. So then if price comes down and then takes like a swing low, you would think you're bearish when actually you're not, and you could probably take a lot of losses if you're doing that. And that's why I want to see that significant size of a pullback for it to be, okay? So I hope that makes sense. All of this is a high, but we don't know where that is yet until we get that significant pullback, okay? Right, so continue the up move. Let's see what happens next. Okay, now we have a bearish change of character. So potentially now that is a signal that we're pulling back. Let's see what happens. Okay, but we haven't. We've continued to the upside. So hopefully you can see, right, how aggressive change of character is when you don't pair it with all of the right confluences. This is why I don't mark on every single change of character, because you'll be doing this all day, and price will be chopping and changing everywhere. So this is why you need to pair it with multi-time frame analysis when you're waiting for price to come into your supply zone. You know, when you're using session timing, because obviously this is a 15-minute time frame, it's going to get quite choppy around the Asian session and the daily market close, whereas I'm going to be paying attention to it during the London session and the New York session, okay? So as we're going through this, don't be sitting here thinking, you know, why do we bother with change of character when it's giving us all these false signals? The point of this exercise here is not for us to try and get really accurate with timing, calling those swing movements. It's just, this is literally just the exercise so you guys understand how to correctly map change of character and how to map your internal highs and lows and how to map your swing structure. Okay, I just want to make that clear, because if you're thinking, you know, this doesn't work very well, it's because you have to time it with everything else. But to know when to use it, first you need to understand how to use it. Okay, hopefully that makes sense. Right, so we had that bearish change. We had that bearish change of character, okay? It was short-lived. We continued to go on and take that high. Yep, K-Man, you keep stealing my thunder here, mate, and taking it before me. But yeah, this essentially is our most recent internal low at this point, okay? Because it's the last candle that failed to break the prior candle's high. So this is where you have to really pay attention to inside bars. And I recommend you have the inside bar indicator on if you don't already, okay? Because what happens is price pulls back here, right? It goes up with this candle here. And then this inside bar fails to break this candle's high. So that means that we have an internal pullback, right? And then price goes up. So when we get a break of this high and we look back to see where is our current active low, it's this low here, because this was the last candle to fail to break that candle's high, okay? why you take inside bar low? Because it's the last candle that failed to break the candle's high. Okay, so with chalk, I always take the nearest low that caused the high, whereas with swing structure, I would take the lowest low. Okay, but with internal structure, I want to be really aggressive because I'm using it as an aggressive tool to give me that first signal that structure is shifting in my favor, right? So that's why I personally use the nearest low to the high. The reason why the inside bar is the nearest low at this point is because look at what happened, right? Price moved up. Then essentially because this candle failed to break this prior candle's high, it's not part of the up move. Price then pulls back on essentially on a lower time frame, you would see price pull back and then price goes up. So when we get a break of this high here, this is my most recent internal low. Okay, so that's why inside bars are very, very useful, at least the way I use it. Okay. So at this point, internal structure is bullish. I would need to see this low go for the internal structure to switch bearish. Let's see, that looks like it doesn't low lower. So that's 80804 and that is 804. Yeah, so it trades the same price. So that's not a break. Okay, boom, now we have it. So now that is our bearish change of character. Okay. Now at this point, the level that I would need to see be broken to the upside for there to be a bullish change of character, it's the top one here. Okay, it's not this one, it's this high here. And the reason why that is because when you look back, all of these candles broke the prior candle's low. See, we have the down move, the next candle breaks the prior candle's low, the next candle breaks the prior candle's low, and the next candle breaks the prior candle's low. So that is all part of the down move. Okay,
Matt.
Yeah.
Just do you know, my question is this your 15-minute chalk or is this your 15-minute chalk?
Oh, sorry. I think I deleted your drawings. You draw it again.
So is this your 15-minute chalk or is this your 15-minute chalk?
Where the dashed lines are, all of these dashed lines that I've left on, they are all the
15-minute chalks. Okay.
Yeah. So essentially, I only draw on those dashed lines or change of character when the internal structure shifts trend. So basically, all those another way of describing what change of character is it's an internal structure trend change. Okay, so I'm not gonna draw on every single internal break of structure. Right. So imagine the internal structure just stays bullish this whole time. I'm not going to draw these lines on. I have no interest in drawing that on because to me, it's not useful information that I want to mark on. Okay, I want to keep my charts nice and clear. But now if price was to come down, right, and take out that internal low to form an internal lower low, and the internal structure switches from bullish to now bearish, okay, that's the only line I'm going to draw on with my dashed line. Because to me, that's useful information. It shows me a little shift in structure. Does that make sense?
Yeah. No, it's just I will like that's I understand the mechanical approach now because I'm using these as my swings for for change of character, but then I'm just trying to get used to now using this approach that you're talking about. That's why I just wanted to make sure that it was that. Yeah, but I get it. Yeah, cool.
So were you using change of character as your like swing structure?
Yeah. So for example, like see this here would be it'd have to break here for me to be interested in it being bearish, and if this is respected, then it needs to break the high, and then that's how I've been looking at it. I've never used inside bar, so so confused.
You don't have to use inside bars. I guess they are a bit more aggressive in a way, but if you follow the way that the clear cut mechanical rules for mapping internal structure in this way, by definition, you have to use the inside bar, because essentially what we are looking at is did in an up move, did the candle break the previous candle's high? If it did, so in this case here, right, you see here we have a candle up, and then the next candle breaks that candle's high, right? It breaks the candle's high. That for me is all part of the up move, right? This candle breaks the prior candle's high, so it's all part of the up move. This inside bar, this white candle, it fails to trade higher. Yeah. So by definition, we have now had, that is now what I call an internal high. The moment the candle fails to break a prior candle's high in a bullish move, that is now the internal high. Okay, so now price starts to pull back, but it's only once that internal high gets broken that I then look back and I know where the internal low is, and it's the nearest low. So at this point, obviously, we only have one candle, right? So this had to be this here had to be the internal low at that point. Okay.
Oh, no,
So
that's
yeah,
amazing.
I mean,
That's
yeah.
amazing. I like that.
Have you had a chance to watch the internal structure stuff yet? Because I know there's been a big influx of new members. I know everyone's at a little bit of different stages in the course. So
No, I mean, that was my next thing. I just didn't really understand how you used inside bar, but that just clears everything up. Really good.
Yeah,
Thank you.
there we go. Yeah, no worries. So when this gets quite confusing, that's kind of the easiest way to ask yourself is literally candle by candle, right? So now we've had the down move. All of these candles break the prior candles low. Right, next candle, what does it do? It breaks the prior candles low. So it's part of the down move. This one here, right, it's a white candle that straight away tells me it did not trade lower than this low, right? So now we are having that internal pullback. That's literally how I read it. So now if you wanted to mark this out, right, maybe this will be a little bit easier. Maybe I will put the lines on and I'll call this the internal. This might help just for you guys to picture it a little bit more. All right, I'll make that bigger. Okay, cool. So that's our active internal low, right? And now at this point, see how all of those candles break the prior candles low? So this means this up here is my active internal high, right? This might help to keep this on here. Cool. So, right, we've had our bearish change of character. That's the dashed line. We know where our internal high is and internal low is. So now the internal structure is bearish. Potentially, we now may be, remember, having this M15 pullback, right? But for me, that is not confirmed that we have a swing high until we have a 15 pip pullback, which we don't have yet. Okay, so what happens with the next candle? We break that candle's low, right? So this is where it gets a little bit tricky again. So because we've taken the low in that one candle, right? As that low breaks, the inside bar then would become our active internal high, right? So in the moment that this low goes, this would be our active internal high, but then straight away price trades back up and breaks it. Okay, so you can see this is where it gets very, very messy and very, very choppy, and it can be a little bit confusing. And essentially that's what's happened there. So this is where I'm just gonna move this out of the way. So you see how the low goes, right? That low gets broken, and as it gets broken, that inside bar would then become our active internal high. But then in the very same candle, price trades back up above it. So we have now technically had a bullish change of character here. Okay, then price continues to trade up, it continues to trade up. Right, and now we have a bearish change of character. Right, can you guys see that? And this is where, you know, this is why like if price is just doing this, it doesn't mean a lot to me. I don't care where that's happened. It doesn't put me off. You know, if I'm looking for shorts, that we've had a bullish change of character there, because it's just not in a significant place, right? I know I keep saying this, so I was really want to drive the point home of you'll see later where we apply this and where it matters, but for this exercise, just really understand it's just knowing. I'm just trying to teach you guys basically how to map it correctly. We'll come to where it's useful to use it later, okay? So we took that low, which then means this was a high. We then took the high, price traded up, and then it pulled back, and then we came down and took the low, okay? So at this point, my active internal low is here. Yeah, and my active internal high is there, okay? So we switched bullish for all of 3 or 4 candles, and now the internal structure has switched bearish again, okay? And now we continue down, right? Because the trade's past the prior candle's low. Then we continue movement down, right? And now we move up. So for there to be a bullish change of character, I need to see this high go, right? And now we get that. So now we have a bullish change of character. That becomes our high, and that becomes our bullish change of character there, all right? Just want to quickly double check. We didn't pull back 15 pips. No, nowhere near. Okay, so we've had a bullish change of character. So now potentially we're continuing to the upside. Okay, that trades higher. So you see how the color of the candles are relevant? It's just whether or not we break the prior candle's high. And now we have a bearish change of character. Okay, so that becomes our active internal low. That's where the change of character was. And then that continues to trade lower. And now we have a pullback. Okay, and then we go higher. So then that becomes our bullish change of character. All right, and this is, well, just, yeah, choppy price action, but it is what it is. Right, and now we have a bearish change of character, right? Because we come down and we've taken the low. Yeah, you're right, actually. So let me just bring that back a bit. I went through a bit too quickly. So when we had that bearish move, so the bearish change of character, right? When we took the high here, right? When we look back, this is not the low anymore, it's this inside bar. Because what you want to do is when you get a high get taken out, you want to look back and go, where was the last candle to fail to break a candle's high? So we look back, this candle obviously broke the prior candle's high. This candle here, it's an inside bar. So this candle failed to break this candle's high here. So that means it was the last low, because what happened is price came down, right? It's really hard to draw this on one candle. And then price moved up with this candle. And then because this candle failed to trade higher, it means there was a pullback there. And then that's all part of the up move. Right, it's just quite hard to draw on this, but essentially you have
That's
a pullback here.
on a lower time frame, isn't it?
Yeah, because an inside bar essentially represents a range on a lower time frame because it failed to break this candle's high here. Okay, just gonna let some people in that are trying to get in. So, oops. Yeah, cool. So yeah, so at this point when that high gets taken, this then becomes our active internal low. Okay, so you have to really like be on the ball in this when you're looking for change of character. Okay, so now we take out this low. This becomes our bearish change of character, and then that becomes our active internal low. Right, look back, make sure our high is in the right place. All of these candles from this high, they all break the prior candle's low. Right, so that's all part of the down move. Okay, so from here, that candle then trades lower. And this candle trades lower, and this candle trades lower. So this is all one move. Okay, so regardless, that might look like it was an up move, but the way I define it is it's where the candle broke the prior candle's low, and they all trade lower. Okay, so that's all part of the down move. So our high stays in the right place. I'm just going to check some of these questions. Give me what should you check is when one candle goes up, breaks internal high, and then the same candle goes down and breaks the internal low, and then goes back to the middle. Yeah, so I think that's kind of a similar situation to this here, where essentially we had a down movement, we had an up movement, and then this very candle took the low and then it took the high. So basically that's what happens there, right? It continues the bearish move, we have a pullback, it takes the low and then it takes the high. That for me then is the bullish change of character. Okay, so then you could potentially anticipate that move, right? Forgive me, this was already asked before I came in late. So my question is, I understand you use two types of mapping, wick and candle breaking, but if someone would be trading a different time frame, how do they go about using a all wick 2 or all wick 1? How do they go about using an all wick 2 and all wick 1? Does it always need to be one and the other together? I'm not entirely sure what you mean. Trading a different time frame, how do they go about using? So
candle close?
Essentially, what I do, right, for all we've been going through here, all internal structure, I just use wick breaks, okay? So everything we've been doing so far on internal structure, it's always a wick break for change of character and for my internal highlight. All I need to see here, it's just a wick break. Yeah, for swing structure, I want to see a candle close above the line, okay? So I always draw my highs and lows from the wicks, always. But for an internal structure break, it just needs to be broken by a wick. For a swing break of structure, it needs to be a candle closure. Doesn't matter what time frame you're on or how you're looking at it. That's just the way it is, okay? We'll talk about multi-time frame analysis, another one, because there are ways in which you can read this, but I don't want to confuse you guys just yet. So yeah, I'm using type, I think it was 2 mapping for chop, but yeah, essentially it's there, right? I've already explained it. One more thing, we just use type 1 mapping in this whole example just now. It wouldn't switch so much. Could you just trade with type 1? Yeah, you can use just type 1 for everything if you wish to do so. That's absolutely fine. So type 1 is where you wait for a kind of body closure, and you can do it on this as well. And because that is slightly more conservative, that will mean that you won't have all of these, price going from bullish to bearish on the internal structure, because it's more conservative. And that's why I prefer to use that for swing structure. The reason why I like using wick breaks, type 2 for internal structure, and I pick the most recent low or high rather than the lowest low or the highest high like I do for swing structure, is because I want this to be very aggressive. Because when I use this in the live market as a tool, just want to mute your mic. There you go. When I use this for sorry, I can't get my words out in the market, right? If I really like this level and I don't want to get short from here, and I'm waiting for that bearish change of character to come in, right? The reason why I want it to be aggressive is because I just want to see that first little bit of confirmation that potentially structure shifting in my favor, that this supply zone is holding, and I just want to see that first little bit of structure go to give me that sign that I now want to get in, okay? And that's why I personally want to be aggressive. So if I see price come in, right, and this is the low here, and it just wicks it, that's fine. I'm cool. It's enough for me to get in because essentially on a lower time frame, that's price breaking it. It's not as significant if a candle closes, but it's enough for me. Now, if you want a bit more confident, hello.
Sorry for interrupting, but I had a question.
Right. Yeah, sure.
So one thing I am confused about is as you said earlier, the multi-time frame, like 4 hour and 15-minute chalk combination. Like sometimes I see that you are on the 4 hour, then you have a chalk, and then you go down to the 15-minute, and sometimes you wait for a swing structure there because a 4 hour chalk is a swing structure on 15-minute essentially.
Sometimes. Yeah, most of the time.
Sometimes you look on the 4 hour chalk and then on a 15-minute again a 4 hour chalk. And sometimes when we have a big impulse on the 4 hour and then we want to catch the pullback, but we on the 4 hour, if we only look at the 4 hour, we have no bearish change of character. Do you then drop on the 15-minute and look for a change of character there? I mean, it's just how the 4 hour and the 15-minute changes of characters are combined or are used with each other, that sometimes it's a bit confusing, because I feel sometimes you look both for a 4 hour chalk and and also 15-minute chalk. Sometimes I don't know if I'm very clear what I say, but
so
do you have a mechanical thinking regarding that?
Yeah, so I think you're getting okay. There's a few bits to unpick here, but essentially you're kind of jumping a bit ahead of here. But when it comes to your trade plan and what you need to see before you get involved, right? That's going to be down to what you want to have in your plan and how mechanical you want to make that, right? So let's say the 4 hour chart is bullish, the M15 is bullish, right? They're both bullish and they're coming into just this 15-minute supply zone, right? So imagine this orange line is 4 hour structure. Now. So it's I don't want to confuse people too much because going into multi-time frame analysis stuff, but we have to change the color. Here we go. Right, cool. So then, how do I explain this? So so price is coming into your supply zone. The 4 hour and the M15 are both bullish. Let's say that this is the 4 hour change of character line. So you're saying that's a long way away, but essentially,
sure, exactly.
Yeah, you can wait for the M15 to change character. Right, that's the first aggressive sign. This is basically what we're looking at here. Or you could wait for, imagine there's like, I haven't drawn this very well, but imagine there's a 15-minute swing low down here, like a major low, and then that's just a minor pullback. So imagine this is the swing low on the 15-minute. Essentially, they're your two options, right? Or three options. So you can either, when price comes into here, you can either wait for the 4 hour to switch bearish. You can wait all the way down here. You'd have to wait for a 4 hour swing boss.
Yeah.
And you could miss out on lot.
Got it. Yes, very clear.
Or you can wait for a 15-minute swing breaker structure. So you'd wait for the 15-minute trend to switch bearish, right?
Yes.
That 15-minute boss here where the swing trend changes, that is a lot of the times, but not always, a 4 hour change of character.
Yeah.
Okay. Because that minor pullback on the 4 hour chart would be a swing pullback on M15. Not always, but a lot of time. Okay. So that's kind of your middle option for confluence. And then your most aggressive option, not going any lower than M15, would be to wait for an M15 change of character.
Yeah.
Okay.
Yeah.
So I was just kind of summarize that quickly for everyone. If price comes into this supply zone that you want to short from, but the 4 hour and the M15 are both bullish, right? Ignoring the M1, just not going any lower than M15. The most aggressive thing you can wait for in terms of structure is you wait for the internal low to get broken. Okay. So you have an M15 change of character. That's obviously the most aggressive form because as we've seen here, right? You could get in early, you can get a bearish change of character and it can switch bullish again, right? So that's why this is aggressive, because you could get in short and it can go. So you have to understand when and when not to do this, and it's going to be down into each individual trader. Someone else might want a bit more confluence. So the next thing you can look for is for the M15 swing low to be broken. Okay, so we get a swing breaker structure. And now when that happens, now the M15 trend has switched to bearish. So now you have a lot more confluence when you get a swing breaker structure compared to just an internal change of character. So now if price pulls back up, what's happened? Well, now because you've had a swing breaker structure, because a swing low has been taken out, this now becomes a strong M15 swing high.
Yeah.
Because it took out a strong low. So now you're trading short from a strong swing high, because in theory, if the M15 trend is going to continue bearish, this should hold. There's no guarantee, especially when you only get one M15 breaker structure against the higher time frame trend. We saw this a lot the last few weeks. when the swing trend was very, very strong. That one break of structure isn't a lot, and price can continue up. Okay, but that is obviously a lot more confluence than just a change of character. Now that M15 swing break of structure, like I was saying, it's not always, but a lot of time, a 4-hour chalk, because that M15 swing pullback is very likely a small little pullback on the 4-hour chart. Okay, so don't get too confused and think an M15 boss has to be a 4-hour chalk, but just roughly know in your mind that's generally what it looks like.
Yes.
Now, if you want even more confluence, when price comes all the way down here, and then we get a 4-hour, let's say this is the swing 4-hour low, we get a 4-hour break of structure. Now the 4-hour is bearish, the M15 is bearish, and it's very likely we're going to get that deeper daily pullback.
But just the last question, and thank you, Matt, and sorry for changing topic a bit.
That's all right.
But there is not one way that you advocate towards in the Photon mentorship. Can it be a little bit of discretion as to this example that you took, waiting for a 15-minute chalk, 15-minute swing to go, or even a 4-hour swing? Is it to our own back testing? Because up to now, we are taught that to follow a very mechanical way. But this example right here, which I think is very fundamental and maybe the most important thing for my personality, is it something that you would advise me to follow? What is your personal opinion about it?
So I don't know, have you had a chance to watch the beginner trading system lesson in the trade plan module yet?
Yes, exactly. Yeah.
You have. So I'm pretty sure in there I give you a pretty strict starting point. So for me personally, I use a little bit of discretion with this because I like to see how the overall high time frame story looks like. Obviously, I look at quite a lot of time frames. 4 hour and 15 are my main ones, but I like to use a bit of discretion. How much confluence does the zone have? How well priced is it on the M15? How well priced is it on the 4 hour chart? What is the daily doing? What's the weekly doing? How corrective did we put into there? Are we getting good liquidity sweeps, etc.? Right. But obviously, like you say, when you guys are starting out, and I massively advise this, I want you guys to have a very simple and very mechanical thing that you wait for. So some of you, I think I'm pretty sure I write it in the lesson notes below there, and it should be in that lesson. I put it in a few of those ones where essentially you want to just have in your plan a rule like this. It doesn't have to be this rule, but something like this. When price comes into an M15 zone, at a minimum, I'm going to wait for an M15 change of character. Okay, so you would always wait for this structure here rather than entering on the first M1 entry. At minimum, you're going to wait for that. Okay, now what some of you then may want to add to your rule is if there is a 4 hour zone as well. Excuse me, and prices hit the 15 zone, the 15-minute zone within that 4 hour zone. That's obviously more confidence, right? Rather than just an M15 zone on its own, because you have both the 4 hour and M15 supply trying to trade against the 4 hour trend. Maybe you're then happy to trade an M1 change of character, and you don't have to wait for the M15 change of character. Okay. Or some of you, if it's only an M15, maybe you're not happy with a chalk and you want to see an M15 boss, things like this. Okay, so you can make it a very simple rule, and just stick to it. I personally, like I said, I use a bit of discretion. So I'm pretty sure I've put in that lesson and in the notes below, I've given you a guideline to follow. I can't remember exactly what it was, but I think it was if price comes into a 4 hour zone, wait for an M15 chalk. If price comes into an M15 zone, wait for an M1 chalk, and if it comes into an M15 zone refined in an M4, I can't remember off the top of my head. I'll try and find it for you, and I'll post it in the Discord because I don't want to confuse people now. I can't remember exactly what I went for, but hopefully you can kind of see that there's not one best way of doing it because it's going to massively depend on how aggressive you want to be,
exactly,
and how it looks overall. But the way I try and do it in this course, okay, is I'm a massive advocate, like you guys know, of making it mechanical, and I try to show you the different ways in which you can use all of these concepts together. And I say this is how you can make it mechanical, but ultimately you're going to have to pick what you want it to be and how aggressive you want to be. Because if you wait for an M15 boss, you're going to have a much higher strike rate, but you're going to not be in as many trades as someone who only waits for a chalk. That doesn't mean that because you have a higher strike rate, you're going to be more profitable. Because it depends on what your psychology can handle. Are you gonna, if you take a loss in that first M15 chalk, are you gonna take the next one, or are you gonna, chicken out because you're already taking a loss? So some people can handle that and they still trade well. Some people can't, and they need more confluence. But then they have to understand that they're going to be in less trades. But that might work better for them overall. So, right, I kind of don't want to go into about that too much longer, but I'm pretty sure I do put it in the lesson notes. I'll have a look after this, and I'll put it in the Discord. But yeah, essentially, come up with a very, very simple rule where it's like that, where you literally says in your plan, if it's just an M15 zone, you're going to say wait for an M15 chock. If it's just a 4-hour zone, you're going to wait for an M15 chock. But if it's an M15 refined in a 4-hour zone, you're happy to trade an M1 chock. Okay, and that could be 3 simple lines like that. Now, you may want to add a bit more to it and make your trade plan a little bit more complex, where it may depend on if it's trading pro trend or counter trend. Because in this example, if you're getting short from the supply zone, you're trading against the 4-hour and the M15, right? So you're trying to essentially call a 4-hour pullback with just an M15 supply zone, right? Which can happen, but it would be a lot better if, generally 4-hour pullbacks are going to react to 4-hour zones, not just an M15 zone. It doesn't have to, but generally. So maybe in this case, when you're trading against both the M15 and the 4-hour trend, you're going to wait for an M15 boss. But maybe when it's pro trend, so let's say when price is coming down here, right? Maybe it's only an M15 zone. There's no 4-hour zone here, right? Maybe you're happy to just take the M15 chock and you're happy to get involved. But up here, because it's against the 4-hour and the M15, you're not going to take an M15 chock. You're always going to wait for an M15 boss. Okay, so can you see how you can clearly define in your plan those 2 very different scenarios? One where they're both counter, yeah, but you need a bit more confidence. You want a swing boss. But here, because it's pro trend or pro the 4-hour trend, but it would be against the M15 trend, right? Because M15 would have had to switch bearish to get down here. You're happy to just wait for an M15 chock rather than the M15 swing boss, which would be here. And some of you don't have to do that, right? You can wait for an M1 boss. So one other thing I want to make clear just before I kind of move on back to structure is that in the lessons, right, there's this price action example that I draw out, but basically very similar to this, right, that I use in every single lesson. And I show how we wait for price to pull back into demand, we wait for the M15 to change character, and then we wait for the M1 to pull back and change character. That is just like the most perfect sort of high probability example, but you don't have to wait for that, right? If price comes down into this level here, it's the 4-hour swing low. We have a beautiful extreme demand zone. There's a 4-hour demand zone here as well, right? If price comes in, sometimes I'll hit that first M1 entry, or I'll wait, I don't want to get too caught into entries here. I'll wait for an M1 liquidity sweep, and then I'll wait for a clear, decent move. You don't have to wait for an M15 change of character because you're trading pro trend at that point, pro the 4-hour trend. So this is where it comes with time and experience of when you're willing to pick and choose how much confidence you want to see in terms of chocks and bosses. But yeah, like I said, when you're starting out, keep it very, very simple and have that rule in your plan, depending on what zone it's hitting, whether you want to wait for an M15 chock or whether you're ready to hit an M1 chock, okay? But yeah, for some of you guys, a lot of you guys, right, we've had tons of new members in the last few weeks. This is going to seem, even if you have prior experience, it's going to seem a little bit over the place and overwhelming. And that's kind of why the purpose of this, excuse me, the purpose of this sort of, webinar is really just to concentrate on the process of knowing what a valid change of character is and where your internal highs and where your internal lows, because this here, what we just spoke about for the last 10 minutes is where we're getting to, right? This is where we're going to get further down to the line, and that's where it becomes a lot more powerful of understanding when to use it, how much you want to see and why. But before we can get to that point, the majority of members in here need to understand how you actually map it first, because until you understand how to map it, all of this is, there's no point in looking at it, right? Because I'm seeing a lot in the community where people are mapping or marking chock in the wrong place. So we need to make sure we have the foundation right first before we understand when to use it. First, we need to understand how to use it. That makes sense. But I know I appreciate everyone's at very different levels of experience. So I kind of just want to use this to get this nailed. But yeah, to answer your question directly, just leave it there. That will be the best lesson, that beginner trading system, where I kind of try to give you as much as a clear starting point as possible. I do still leave some optionality in there for you, but I explain how to make it very mechanical, just like this. Like when it comes down to that 4-hour and M15 zone, then you wait for this chock, or it's just an M15 zone, et cetera, et cetera. So yeah, hit me up with a message or something later if you can't find it, or we can have a further discussion around it there. But I kind of want to just
thank you so much for this very clear explanation. Thank you.
That's all right. You're welcome. You're welcome. But for any of you guys who that was just a bit confusing, just let it exit your brain for a little bit and come back to this at a later point in time. Just want to quickly catch up on the text. So okay, you always see the 15 chock before the 4-hour. Yeah, you will always see the 15. The M15 will always change character before you see anything on the 4-hour chart, right? Because for the 4-hour chart to pull back, a change of character is going to be all the way down here, whereas that M15 change of character, it's always all the way near the top, right? The lower the time frame you go, that chalk is going to happen way before that higher time frame. Chalk, if you have probability and RR in your favor, you can enter any of these levels. Exactly. That's why I like to use a bit of discretion. So what about M1 chalk inside an S&D zone? So inside an M15 POI? Yeah, that's absolutely fine. So I personally will use an M1 change of character within an M15 POI. But again, it depends on how everything looks together, right? And that's why I use a little bit of discretion, depending on, like today, quickly hop on. So like this morning, I will go back to this in a second, but like, right, we were looking a couple of demand zones I mark out, but these are not demand zones I necessarily want to get long from. I'm just marking them out to use them as useful information to see how price action develops and to see where flips form. As we were coming down into London here this morning, right, price came into this level and it would have given, a few M1 entries, but that's not an area in which I want to get long, because you're trading against, all of this order flow. I don't want to do a full breakdown of this, but essentially the reason why I'm not going to enter an M1 change of character is because of how the whole higher time frame story looks like. So in this case, at a bare minimum, I want to see the M15 change character before I look to get involved here, because it's very likely this is what's going to happen. So you can trade this, but you need to be super aggressive with your management. And that's why, in these circumstances, it's an M15 POI, but I'm not going to look to get long. At bare minimum, I would want to see that high go at that point. I would need to see that change of character before I would then consider trying to play that move, okay? But other times, right, if price had to pull back up into this M15 zone, I'm going to hit an M1 entry in there all day long, because, again, I don't want to do a full breakdown, right? But this is the zone I want to trade with. It's with the momentum. We've had, series of mitigations. We've had our M15 change of character. It's in line with the M15 and the 4-hour bearish trend. This was a sweep zone. It's technically a flip zone as well, right? It reacted to the demand within this wick. It came up, it pushed down. If price pulls back into here, this is pro trend. It's done everything I need to see. It's a great POI. I'm going to be a lot more inclined to then look for that M1 sweep, pull back in, shock, and I'm going to get short. Whereas if that gives an M1 entry here, I'm not too interested in it, because I just know that's likely what's going to happen, okay? So yeah, that's why for me, I have different rules, but for some of you, you may want to just make it strict, you know exactly what you're looking for. And that's why you don't necessarily just want to say in your plan, okay, it's an M15 zone, I'm always going to wait for an M15 change of character. You can do that, but you may want to have a separate rule for when it's pro trend and when it's counter trend. And that's actually just reminded me, I do talk about this in depth in that lesson. So for anyone who's wondering, I'm referring to, it's called the beginner trading system lesson. And it's in the trading plan module. So this is after that you've gone through all the technical analysis module. It's way further down the course, and this is why I don't want to really get too bogged down in all this now. And we need to really go back to step one and just understand how you map it first, okay? But for those of you who are a bit more further along or have experience, in that lesson I talk all about this, okay? Whether it's pro trend, whether it's counter trend, what POI it's in, and what change of character you should wait for. It's a recommended starting point, just so you have something to work with. You have that plan, then you can go away and test it, build case studies, do your daily markups with that starting point. And then you can go, okay, actually, I want to use a bit of discretion here, or actually, that's too aggressive for me. I want to wait for a boss instead of a chuck on this time frame, or actually, that's too conservative for me. I want to be a bit more aggressive, and then you can tweak it. But yeah, anyway, the starting point's there. Ooh, okay, so I think we've got up with all the questions. I'll tell you what we'll do is we'll kind of, and I realize it gets a little bit boring, just kind of mapping on every little internal high, but I kind of just want to get this sort of bit of, so just kind of stick on with this bit of price action. And then what I'll do is I'll kind of ignore questions for now. If it's not about literally the exact stuff I'm going and mapping, and then we'll kind of cover any sort of additional questions at the end, just because, for obvious reasons, right? Cool. So quick recap. We had our swing breaker stretch to the upside. We are waiting for sorry, I'm lost my words now. So we've had a swing breaker stretch to the upside. We know we're obviously forming that higher high, but we don't know where the swing high is. That swing high, right, I'm going to mark out, right, with my fancy highlighter pen tool until we pull back 15 pips. So we haven't quite pulled back 15 pips yet. So all of this is still internal structure. After we mapped all of this, obviously it got quite choppy and quite messy. You know, you have bearish breaks, bearish changes of character, bullish changes of character, right? It's just what happens. It is what it is. Then we had another bearish change of character, and where we currently are at, this is our internal high, because from that point onwards, all of these candles broke the prior candle's low, okay? So it's all part of the down moves. Can make this orange again. All right, so then this becomes our internal low. Let's go on from here. So now we pull back, okay, nothing else has happened. Okay, now we have a bullish change of character again, because we've waited to the internal high. Okay, so at this point, when we take out that high, where is our active internal low? It's this here, yeah, spot on, because that is the last candle that failed to break that candle's high. Okay, so what happens there is price moves up, it pulls back because that candle fails to break that candle's high, and then it moves up. Okay, so remember, for internal structure, I always take the most recent. Imagine this was swing structure for a second. If it was, and that imagine that was a swing breaker structure, that would not be my swing low. This would be, because for swing structure, I always hit the lowest point, but for internal, I always hit the nearest. Okay, so this then becomes our internal low, right? That would be the low I need to see go to get a bearish change of character. That's our active high, and I'm just going to mark on this bullish shock, right? Cool. And then we get a bearish change of character again. Okay, so that becomes our low, that becomes our shock, right? And this is very kind of typical of when we're trying to start that pullback. So you can see, right, that's the high in place because that was the last candle that failed to break the candle's low. So that's all part of the down move. That's all part of the down move. Right, and now we've had a pullback. Show a little bit more accurately. Okay, now we've taken this low. Where is our most recent internal high? Well, if you look, where was the last candle that failed to break the prior candle's low? Yeah, this was inside bar was the last candle, right? If you look, did it break the previous candle's low? Did it break this candle's low here, right? So if you go back from the start, right, this candle was the last candle, right? Did this candle here break the previous candle's low? Yes, right? It clearly broke this previous candle's low. Okay, this candle here, did it break the previous candle's low? Yes, it broke the previous candle's low. Okay, so now we're on the inside bar, the white candle. Did this candle here break the previous candle's low? No. So that means it was a counter internal trend pullback, right? Because it means, look, if you look at price action, breaks the prior candle's low, breaks the prior candle's low, this one fails to do so. So that means it's a pullback, right? Then from that point onwards, those next two candles continue to break the prior candle's low, right? So that becomes our most recent internal high, right? So when this low goes here, we now move this line down, and that becomes our internal high, and this becomes our internal low. But I don't mark on a dashed line here on this break because it's not a change of character, because that was our bearish change of character up here, and we've just continued bearish. So I'm not going to bother marking it on, right? Because I'm only interested in when structure shifts from bearish to bullish or bullish to bearish. All right, let's see now. Have we pulled back 15 pips? I think we have. Right, yeah, we've pulled back 18 pips. So now what I would do, right, if I'm in the live market, I now know for certain the way that I personally map M15 structure on euro dollar, right? This will be different for each pair in each time frame, but for me, 15 pips works. That is now my M15 swing high. Okay, so now what you can do, right, and this is something I recommend you all do when you're doing this in the live market, is map out that with a horizontal line, right, as your swing high. Cool, and then you know you're working within this range, okay? So again, try not to worry too much about supply and demand, all this stuff, but this is essentially the process I go through. We had a swing breaker structure back here as soon as price closed above that high. Okay, so as soon as we get that breaker structure, doesn't mean we're gonna have a pullback straight away, but I have in the back of my mind that price is gonna pull back, right? So we start to look for those bearish changes of character. But like I've been trying to kind of explain, right, change of character is extremely, extremely aggressive. It's the most aggressive form of breaker structure. So it will happen a lot where you'll get a bearish breaker structure, but then we switch bullish again, we continue the up move. We had a bearish breaker structure, bearish change of character, I should say, right? And then we continue the up move. Then we had a bearish shock again. And then you see it was very, very complex, right? Because when price pulls back, when you get counter trend movements, they're often complex and it breaks highs and it breaks lows. And that's why counter trend trading is so much harder, okay? Whereas when we come down to here, right, these pro trend moves, you can see, look, it's all choppy, it's all choppy, it's all choppy. You know, there'll be kind of multiple breaks of structure, and then boom, it's quite clean until we start the pullback, and then we start taking highs and lows, right? And it's much more complex. Okay. So yeah, so this is the swing low, this is the swing high, and essentially we're just waiting for price to pull back. We would obviously mark out our demand zones down within here, and essentially what we'd be waiting for is price to continue to pull back down towards the discount, and then we'd be waiting for an internal high to go, right? And then once that happens, again, not a guarantee, but the first little signal that internal structure is switch bullish again, and we can anticipate that potentially the high low is in place, and then we can start to target and anticipate that this is a weak swing high. Why is it a weak swing high? Well, because it hasn't taken out the strong swing low at that point, right? We expect that this low will hold because it caused a swing higher high. Yeah, and that's really essentially it. So we'll play through a little bit more price action. But yeah, this is kind of a really good example of why change of character is very, very aggressive, and you'll see how often it changes, how often structure will change like this, especially when it's pulling back counter trend. But the reason why we use it I know I've said this a few times, is when it comes into an area like this, right, and I'm just waiting for that first sign, is I'll start to look for that to come down. Now, I've had this question quite a few times as well, is when price has that first initial sort of kind of bearish change of character up here, and we move down, let's say we have a really nice then M15 supply zone that I want to look to get short from. Whoops. All right, let's just say this was the zone we were looking at, the extreme, right? And we wanted to get short. For price to pull back to this zone, right, for us to get short, it has to do what? The internal structure switches bullish again, right? And we get those bullish changes of character to the upside. So you are shorting against that, right? How do I explain this? So I think a lot of people are getting confused is how can you short against if there's been a bullish change of character, like how can you short against bullish internal structure? And that's the thing, it's like I'm not looking at every single change of character, I'm just looking for when price came into this supply zone, this 4-hour supply zone, I just want to know, is it going to hold? Because I don't want to start getting short from here if price is just going to smash up straight through it. So that's just why I wait for that first little sign that structure shifting in my favor. We get that bearish change of character, we start to have a bit of a down move, we're creating supply zones. Okay, yes, the internal structure has to switch bullish to get back to me, but I'm happy to get short here. Now you don't have to, right? You can wait for another bearish change of character. So at that point, as price taps into our zone, what are we waiting for? Well, we're waiting for this low to go, our most recent internal low. So now price has confirmed our 4-hour level, now it's confirmed our M15 zone, and now we've waited for a bearish change of character again. We've again waited for the internal structure to switch bearish, and now we're seeing that solid movement down. So now you have two POIs to potentially look at. We have this one here, yeah, right, and we have this one down here, which is really not so great as things stand. Okay, so I would definitely be looking really for price to now come up to this level, right, to look for potential short entries, right? So I would look for price to come in, I would drop down onto the M1, right? I would then wait for the M1 to change character, and then we can look to get short, right? Again, absolutely no guarantee this is going to hold because we are trading against the M15 trend, right? The M15 chart is still bullish. This is a swing low, this is a swing high. The M15 could easily, literally just mitigate, something here, right? This whole sell to buy, this demand level, and it could just come up and smash straight through. Because I have no idea if this is a strong zone or anything. I have no idea what the rest of the high time frames are looking at. I'm just trying to kind of explain to you how I'm pairing internal structure with how I'd be looking for trade entries, right? But at this point, you can see we've had two supply zones. We've had our bearish change of character. The internal structure is in line with the swing trend. Yeah, so hopefully that makes sense. Do I have any questions specifically about this? Kind of just looking at one time frame and mapping the internal highs and internal lows. I can just keep going with a bit more bar replay. We'll see if we get in some more complex situations. But yeah, we'll continue down. Okay, so now again, you can see this, right? We get a bullish change of character. So where is our internal low? It's the most recent low. So let's just double check where this is. Okay, let me see. Okay, so this is kind of, yeah, a good example because it's not always clear cut. So when this high gets taken, right, where was the last candle that failed to break the prior candle's high? It was this inside bar here. Okay, so you could say, oh, well, that's my internal low, but if you were to draw your internal low across it, you can see it was broken, right? So for me, it actually becomes this candle here. I would do it on that one because this candle is essentially, I can't remember the exact technical name for this candle. I think they called it like outside bars or something, but outside reversals. But essentially, because that candle was the last point, I would count that as my chalk line. It's a bit, yeah, it's not super clear cut, that one, because price moves up, it comes back, then you have the counter trend movement, then this candle takes that low and then takes the high, and then this candle's all part of the up move. But because, yeah, so yeah, I would count it as this low here. So sometimes it is a little bit more complex, but that's the way I would count it in this case. If price took that low, I would be happy to call that a bearish change of character, okay? Sometimes it is a little bit messy there, but that for me is the way I would do it. Okay, so that was our bullish change of character there. And we continue the up move. And we pull back. Okay, and then boom, we've had some mad news candle, which is pretty horrible to work with. What time was that? Yeah, 1:30. That was probably some US CPI or something, or FOMC. But yeah, do we have any more questions in there? Hopefully that makes sense. Do you guys want me to continue to kind of just keep going through bar replay and mapping the internal highs and lows? I mean, we're going for about an hour and a half now. I don't want it to go on for hours and hours. Just unmute yourself if any of you have any sort of questions you want to ask for. I'm happy to do kind of another 15 minutes of literally just doing bar replay. I I know it's very boring for some of you, but it's just really, really key to kind of get this nailed down. This probably wasn't the best section of price action either, because it's very, very corrective and choppy. So it seems probably a little bit confusing to some of you as to why, why we're bothering to do this, because it doesn't seem that effective. But yeah, trust me, when you pair it in the right areas, it really, really helps, which we'll get into as we start to use multi-time frame on this. Okay, another 15 minutes, cool. All right. What I'm gonna do is just gonna play it forward a little bit because we've got this massive candle to work with. I'll tell you what we'll do, we'll hop on the 4-hour chart for a bit. You usually get a bit clearer price action because obviously M15 it's a bit more intraday, so you deal with sort of more choppy intraday price action with sessions and stuff and low volume, whereas 4 hours should be a little bit clearer. Yeah, let's go from here. So cool, we'll do more bar replay. Right, so blank chart again. What's the first thing you need to do? You need to make sure that you have looked back far left enough to make sure you have your swing high and your swing low in the correct place. Get some water. So for me, I personally use now a 40 pip rule on euro dollar on the 4-hour time frame, and I try to be as strict as possible. Before I did use a little bit of leeway here where, that wasn't necessarily the most obvious of swings. So a good example would be this candle here. If I measure it, right, from this low here to this high, this candle is over 40 pips. So before, sometimes I'll be umming about whether to call that swing structure, because for me, this looks like the more obvious swing in price, right? But now I try and, at least with both the 4 and M15, I try and be it like an algorithm. Literally, if an algorithm was going to map this for me with code, how would it do it? Okay, and that for me, if anything is 40 pips or more, I will now mark that as a 4-hour swing structure. Okay, so let's make sure we've got the right level in place. I just want to measure this quickly. It's kind of the process I'd go through. Okay, so that was one movement down. Okay, so what I was basically checking here was that swing pullback? It was less than 40 pips and no. So what that means is this is all one leg down. Okay, this is one pullback, and then that is clearly a 4-hour boss. So whenever I want to make sure I've got my high and low in place, I try and go to where kind of the nearest big obvious swing and swing structure is. Okay, so when this swing low goes here, all right, where is our swing high? It's the highest point that took out this low after it was formed. So after this low was formed, when it broke, yeah, the highest point is up here. Okay, so that becomes my swing high. Zoom right in. All right, so now we get a break. Oops. There you go. All right, this pullback here was more than 40 pips. So this is really, really messy. It's not clear structure, but I'm going to keep it mechanical. That becomes my breaker structure. Okay, so what that means is that that was a swing low, a pullback to form a swing high, and then we have, once price then pulls back 40 pips, which obviously clearly happens, that would then become my swing low. So we can mark out the lowest point. Okay, and then we get a swing breaker structure here. All right, price goes up to break above that high. Don't think any of these are 40 pips, clearly not. Just do a bit more accurately. Not quite 40 pips. What about here? Yeah, that's more than 40 pips. So that for me then becomes a swing pullback here, right? Once we pull back 40 pips, okay, so that's my swing high. Again, not the cleanest of price action, but that for me is swing structure. So we break structure again. Is that 40 pips? No, this looks like it was. Yeah, so that then becomes my next breaker structure. All right, that's my swing high. That becomes my lowest point, right? That went on to break the high after the high was formed. So remember, again, if you're not sure, obviously pretty simple in this case, but draw a box from the high to where it's broken, and then just draw it all the way down, and you just pick the lowest point in that box, and that becomes your swing low in a bullish market, okay? And then again, we measure this breaker structure. How far was that pullback? Not 40 pips, so that's not swing structure. How about from this high to this low? Okay, yeah, that's a 40 pip pullback, okay? More than 40 pips, so that means that this is my current swing high. So at this point here, oops, let's mark out the swing low. Okay, what we'll do is we'll do this till another 20 minutes and then we'll call it a day, but that should give us a decent bit of price action to go through. Cool. Make it a bit bigger, get some pretty. And then we'll map this out as our swing high. So I really recommend, especially when you're in a live market as well, you literally have your charts mapped like this, with you have a horizontal line literally label your swing high and your swing low on it and just have it drawn out to the side. And this way you can literally visually see the moment you hop on the charts, you know what range you're working within. And it just gives you so much clarity, especially if you're kind of getting zoomed in and you're lost. Is this internal? Is this swing, etc., etc.? It just really helps to keep it clear. And if you just do it kind of, you know, on 2 time frames, 4 hour and M15, you know, obviously if you trade like me, and yeah, don't try and get too confused with the daily and the weekly and all that stuff. Just if it's a bit overwhelming. Okay, so this is our swing high, this is our swing low. If we look at the internal structure, what do we have going on? Well, we can see it's part of the up move, that's a pullback, it's all part of the up move. Then we have a pullback, and then that's the up move. So at this point here, I would need to see this low get wicked for there to be a bearish chalk, which it looks like has happened. Yeah, we've just wicked it. So now we've had a bearish change of character. Now at this point here, I think it's going to be useful if I do map the internal high and lows, isn't it? Let's use this for, make it blue or something. All right, and we'll call this the internal high. All right, so where would our internal high level be? For me, it's the nearest candle that failed to break the prior candle's low. Okay, so what happened is, confusing when you have inside bars. I think I did this bit of price action in the lesson, so you guys are probably used to this bit, but essentially, yeah, this inside bar was the last candle because it failed to break this candle's low, right? And then they will go down, right? So that becomes our internal high, right? It does get a little bit of used to getting your eyes used to this with inside bars, but essentially that is the last candle that failed to break the prior candle's low. So that is our current internal high, okay? So let's use a line for this. Bottom, cool. All right, it's all part of the down move. Okay, now we've continued that bearish move, okay? So at this point, where is our internal high? It's the last candle that failed to break the prior candle's low. So this candle fell to this candle here, this bearish candle did break the prior candle's low, so that's part of the down move. This candle obviously broke the prior candle's low, so it's part of the down move. This candle didn't, right? So this becomes our internal high. It's quite an easy one to spot in that case, but just try and talk through that kind of mechanical way of defining it, right? For obviously when you get more complex situations like that where you have the inside bar. Okay, so then we move it to this candle here. Breaks the prior candle's low. That's not anything basically because it doesn't do anything, right? At this point here, right, that took out the low. So we just look back where the nearest point was. This is just nothing. It's just substructure essentially, right? If we bring it back to this point, sorry, go on.
Would it be fair to say, you see with chocks, or you mainly just use, not you specifically, but would you say it's used mainly for reversals? Because I noticed, for example, in the morning when you post your charts, you'll have your 4 hour marked out, 15 and the 1 minute, and you'll have your zones. So really and truly, you're waiting for that to come into your zone, and then you're waiting for the chop, whether it's for a buy or sell. Would you say?
Yes, but it depends on what. I'm not necessarily waiting for it on like the higher time frame. So imagine.
No, yeah.
Yeah, but basically, so to keep it simple, right? My minimum rule is, my strict rule is, at a bare minimum, when price enters a zone, any zone, at a bare minimum, I need to see a chalk in the direction in which I want to trade on the time frame I am entering on. That's like the bare minimum. So what that means is, let's say price comes into a daily demand zone, and I'm thinking about getting long. At a bare minimum, I would need to see a chalk on the time frame I'm entering on. So imagine I'm entering on the M1. And price comes into a daily zone, at a bare minimum, I need to see an M1 chalk, right? Obviously, I'm going to want to see more than that, but I'm just trying to give you an extreme example. So let's say, you know, this was a chart I was looking at, right? We're coming into the London session, and this was my 4 hour demand zone, right? Obviously, I can't say in this exact situation exactly what I'm going to wait for because I need to do my full multi-time frame analysis. I need to go and look, is there a refined M15 zone within here, et cetera, et cetera. But because at this point here, right, we're pro trend, put that about where it was. Essentially, you can think about being a bit more aggressive here because, you know, I'm going to say with a pretty good certainty that because we had a 4 hour bearish chalk up here, right, that was the first time the internal structure switched bearish, that on the M15 is likely going to be a swing breaker structure. So this movement here is most likely the M15 in a bearish trend, right, to facilitate that 4 hour pullback into this zone. Okay, so when price comes into this 4 hour demand zone here, let's just assume that the M15 is bearish. Okay, So you can, because it's pro the 4 hour trend, you can just wait for an M1 change of character, right? Trade that first little move, but you're trading against the M15. It could be coming off, you know, a really nice level here. I don't know what the daily looks like, etc., etc. So let's just kind of, you know what I mean? That's why it matters so much in the overall hard time frame story. So like I said, it's a 4 hour zone. You could just wait for an M1 shock. In this certain circumstance, I'll probably say it's quite a big range you're playing within, right? There's a lot of, you know, there's a lot of movement here, a lot of room for price to move. So you don't have to be in on that first M1 entry. And this is why I would say to a lot of you, just a very simple thing is always wait for an M15 change of character. So in this circumstance, you would be waiting for something like this. Imagine this is the M15 price action coming into 4 hour zone, and you just wait for that first little M15 shock that we were looking at before, right? And now you have a bit more confirmation and we can get long. But there's other things that we're going to look at, right? We're going to look at, you know, is supply still in control? We can look for M15 supply to fail first, yada, yada, yada. It's all going to depend on how price gets here. And that's why I can't just give you like, you know, in my plan, I don't have this is exactly what I wait for every time because it's always different. And I personally like to use a little bit of discretion. And I kind of try and make that clear in my forecast as best as possible. But I can't say this is exactly what I am or not going to do in every certain situation. In some situations, like this morning, where you know price was coming down with a lot of momentum and we're coming down into some demand zones, it was all counter trend. You know, there's no way I'm going to enter a counter trend on just the first one and change the character. I'm going to want to see a lot more. Yeah, we're kind of getting ahead of ourselves here a little bit, but if you watch the it's kind of what I was talking about earlier, the beginning trading system lesson, I do in there give you like an exact mechanical rule of what to do in each, whether it's a 4 hour zone or an M15 zone, and whether it's pro the 4 hour, whether it's counter, if it's pro the 4 hour and pro the M15, if it's pro the 4 hour but counter the M15, if it's counter the M15 and it's counter the 4 hour, I'm pretty sure, I'm 95% sure in that lesson, I give you exact rules in terms of chalk of what to wait for in all 4 of those different circumstances to give you a starting point. So yeah, does that kind of answer what you're asking?
Yeah, no, definitely. I think
yeah,
I kind of phrased it a bit wrong. Basically, what I meant was really and truly the only time you'd use your chalk, even on, say, for example, you've got your desired time frame, you'd want to wait for the chalk before, obviously, say, for example, in your supply or your demand, you'd wait for the chalk on the desired time frame. So for 4 hour or the hour or the 15. Because I realized other than that, you don't necessarily need it unless, for example, again, if you're waiting for the counter trend, like the diagram you've got, then it would give you the heads up, and then if you want to enter on a smaller time frame or whatnot. But yeah, no, I just wanted to.
Yeah, it's literally just like the simplest way I can like the reason why I use chalk is it's just that first little sign that structure might be shifting in my favor. You know, it's just giving you that little bit of extra confirmation. Like, let's say we're just trading the 4 hour chart. We know it's pro trend. This is a strong low. In theory, if the 4 hour trend is going to stay bullish, this low has to hold if it's going to stay bullish. So we know if we're looking from longs from here, it's not 100% guarantee that it's going to work out, but we know there's a very high degree of probability, just purely looking at one time frame, right? Forgetting everything else, there's a really good high degree of probability that this low is going to hold, right? So we could just, you know, slap an order on here if we wanted, right? Risk entry, and that's something you could definitely look at. Or you could wait for price to come into here and then drop down to the M1 or, you know, whatever your time frame you want to use, and straight away start looking for an M1 bullish change of character or whatever, and get in straight away. But obviously, price could come in, it's going to give you that M1 change of character, and it could come in a little bit deeper before that movement goes, right? So you could take a few losses before it goes. Some of you may think, well, you know, I don't know, yes, it's a 4 hour strong low, but actually we're coming off a really strong daily zone. The daily overall was bearish. This was just a daily pullback to form a daily lower high, and we could be continuing down. So actually, I'm a bit more hesitant about the 4 hour staying bullish here. So therefore, what I want to see is I want to see an M15 change of character rather than just an M1. So you'd wait for a little bit more. Now, some of you may be thinking, oh, I really don't like this level, so I want to see an M15 boss. I want to see the M15 switch bullish before I look for long. So you'd wait for price to come into here. Let's say this orange price action is the M15, right? That would be your M15 change of character as soon as we take that little lower high there. But some of you, if you're waiting for that M15 boss, you would wait for this level to go, right? And then you'd be happy to get involved to play that move, right? That's waiting for more confirmation. That M15 boss there, right, this big M15 line is most likely going to be a 4 hour change of character. Again, we're getting a little bit ahead of ourselves here with multi-time frame and stuff, but
Yeah,
hopefully,
no,
yeah,
it
you
definitely
can
makes
see,
sense.
yeah.
Because before joining, I was waiting for the bosses, and then I noticed I was missing out on trades. And obviously, when I joined and I went through the course, I went for the chalk, and then I actually even posted in the chat. I was like, I've missed out on so much trades because I didn't know about the chalk. I used to always wait for the boss. But yeah, no, that definitely cleared things up.
So was that like say if price came into a really nice M15 and 4-hour zone, were you waiting for an M1 boss rather than, is that what you're doing, or an M15 boss?
No, be it the 4-hour. I only recently jumped down to the 15, obviously following the program. Before it was just 4 hour, then 1 hour, mainly 4 hour, because obviously I didn't really know much about breaking it down and the chocks and stuff.
Yeah.
But obviously, since now joining, now I do the 4 hour, then the 15 as well as the daily and the weekly.
Perfect. Yeah, I mean, it's a really useful tool. I mean, obviously you saw, as you guys saw when we were going for the M15, it can get a bit like choppy. And that's why we have to really pair in the right areas. And that's why and you guys would have seen it with my markups this week, where price action has been stuck in this horrendous massive 4-hour and M15 range. And when it's in the middle of the range, right, I expect price to take highs and lows and retrace and do all sorts. And if you map on every change of character, you can do it as an exercise, but if you're doing it to help you with your live trading and it's like putting you off, well, yeah, I'm not going to map on all of these changes of character because I expect there to be changes of character. It's not useful information. Where it's useful information is when we've had a break of structure, prices come into the upside, and I just want to know when is the 4-hour potentially going to start pulling back, because I know when we've had a break of structure, it could pull back. By the way, this isn't directed at you personally. I'm kind of just talking to everyone here, but like when we have that break of structure here, right? Like I said, I'm expecting a pullback, but this could go on for another 300 pips before we get that pullback. So I'm just waiting for that change of character just to help me. Give me a sign purely from structure that pullback might be happening. And that's why we start to pair it with, supply and demand zones, multi-time frame analysis. Are we in the premium discount of a daily range? Where are we coming into, et cetera, et cetera. But yeah, just keeping it simple for now. That's where I'm interested. Okay, now we're getting a pullback. Now we could get a bullish change of character in here and stuff, but I don't necessarily expect that we're necessarily going to go in from here, because I'm more expecting that we're going to get price is going to want to pull back to here, right, to form that high low. So as soon as we come down into here and then we get a change of character, now I'm really paying attention. That change of character means a lot more to me, right? Because it's in that high value area in which I was expecting there to be a bullish move, rather than like, if we get a bullish change of character, like if we had taken this high here, right, that inside bar, we got a bullish change of character here, right? Yes, that could be a signal the 4-hour high low has formed, and I definitely would be paying attention to that, but it's not going to mean as much to me as if it happens down here, right? Because this is the high value area, and that's where a bullish chop becomes a lot more important to me in this circumstance, because this is where I care about looking to get long. Whereas I'm not going to be so bothered if I see a bullish chop here. I'm not going to be really thinking about getting long necessarily, if that makes sense. But yeah, anyways, let's crack on with a bit more bar replay for another 10-15 minutes or so, and then we'll start to wrap things up. Cool. So yeah, we're putting back. We form another internal low. So whereas our high is pretty obvious in this point, it's the last candle that failed to break the prior candle's low, which would be, right, this candle here obviously broke that candle's low, but then did this bearish candle break the prior candle's low? No, right, it failed to break the prior candle's low. So this becomes our most recent internal high, okay? So at this point, right, let's say prices come into our demand zone, and I'm thinking, right, I want to get long, but I'm only going to get long if we get a 4-hour bullish change of character. Then I need to see this high. At the moment, I need to see this high get wicked before I'm going to look to get involved. That's essentially how I'd be using this, okay? Okay, we continue the down move. Right, we've come into demand. There's probably going to be a bullish change of character down here on the M15 or the M1 or the M5, whatever. Anything lower than the 4-hour chart, they're going to start to be switching bullish. But I'm waiting for the 4-hour change of character. I'm waiting for this high to go. So nothing's happening, nothing's happening, nothing's happening, nothing's happening. This is here essentially what I call substructure, right? If you see, right, because I see some people labeling this, right, they would go, well, we've taken this high here, so is that not a bullish change of character? No, it's a substructure break, right? Because we have not taken out the high or the low. So this is just nothing, essentially. In terms of the 4-hour internal price action, this is like the internal price action of the internal price action. So I think it's just easier if we call that substructure going forward, right? This is not structure, this is not price action I care about, really. Okay, nothing's happening, nothing's happening. Have we taken it high yet? Let's look at up here, like what does it say? This is useful to use those. So the high is 8512. What's this high here? 8513. Okay, so this is a pipette higher. So this has not broken it yet. We have not yet had a bullish chalk. Failed to break it. Okay, now we've broken that low. So we continue bearish. So can you see in this instance, if you waited for a 4-hour bullish change of character to confirm this level for you, you would not have gotten a long trade yet. Okay. Now we continue the down move. Now we still haven't broken the demand level, and we still haven't closed below the swing low. So we could, in theory, stay bullish from here. It's very unlikely because with this reaction has obviously failed. But let's see what happens next. Okay, boom. right? So you can see in this instance, waiting for a 4-hour chalk stopped you potentially from taking a loss. Obviously, if you got in with an M1 entry here, you know, price has moved a fair distance. There's no way you're going to take a loss after it's moved 50 pips. But yeah, hopefully you can understand what's going on here purely from how we map structure in this instance. Okay, now got a bit ahead of myself there, but when we took this internal low, where is our most recent high? It's the inside bar, yeah, bang on, because that was the last candle that failed to break the prior candle's low. Because you see from this inside bar onwards, next candle breaks its low, next candle breaks its low, next candle breaks its low, so on and so forth. So this was the last candle to fail to break the prior candle's low. So that becomes our active internal high. So now, right, what also do we have? Well, price broke and closed below the swing low, right? So now we have, I'm gonna move this out of the way, we can use it for something else in a minute. Now we have a swing breaker structure. So now the 4-hour chart has switched bearish, right? That is a boss breaker structure, right? So when we have a breaker structure and a bearish market, where is our swing high? It's the highest point that broke the low after the low formed. So if we want to use our box tool, draw it from the low to where the low was broken, drag it all the way up. Where is the highest point in this box? The high, you can see, stays in the same place in this circumstance. Now, there will be some scenarios in which actually the high does change when you have a trend change. I've put a few examples in the course which we'll see, but just to be aware, you do sometimes still need to check, okay? And in this instance, that would be the swing high, okay? So we'll leave it where it is. And then our swing low, we don't technically know where it is until what? Until we get a 40 pip pullback, okay? So once price pulls back to here, right, then I would know where my true swing low has formed, okay? Now, to see a bullish change of character, technically this is the high that I would need to see broken, right? Okay, cool. Yeah, cool. So that was part of the down move, right? Have we now moved 40 pips? Yeah, we've moved 40 pips. Now, see how this is a scenario in which the swing low and the internal low are in the exact same place. I'll just draw it a little bit below. All right. Essentially, they're in the same place. We can now use our fancy highlighter pen tool. And there we are. That's the place we're in, right? And you can see, yeah, essentially, this would need to be a bullish change of character if we take this high out. But for the 4-hour to actually switch bullish, it would have to take out this swing high and close above it. Okay. So now, see here, right? Again, so there's another example. People are marking this, right? That took the high and then price came down and took the low. So is that a bearish change of character? No, because this is the internal high and this is the internal low. This is just substructure within the internal high and low. This isn't anything I care about really. Yes, you can use that as information. You know, potentially, let's say you wanted to trade from this inside bar supply zone, and then you see this low go, you know, price could have then come back in and gone. And it's still useful information, but purely just in terms of defining the way we do it, where the internal change of character is, that isn't one, okay? You can call that substructured chalk or something different, but it's not the true chalk that we're looking at, right? Just because that question has come up quite a lot recently. If price action is going in a preferred direction, how can one scale in and scale up? Well, you just, I mean, it's a bit beyond the scope of this lesson, but essentially we just, you know, we look to continue to play continuations. We wait for price to pull back where the last lower high was. This is a supply zone, and we continue to look for price to move and scale into. But yeah, this is a bit beyond the scope of this lesson at the moment. So in many cases, we do not get a shock which indicates a pullback, because when it does, it's too late since a new lower low has been made. So yeah, in this instance, I think what you're asking is, right, the 4-hour pulls back. So by this candle here, right, if I bring it back to this point here, right, we obviously had our swing breaker structure to the downside. Look at this, right? So the 4-hour switch bearish. Price then pulled back, if we measure it, 40 pips. So for me, I know that I can mark that as my swing low, right, and my internal low, it's in the same place. But yeah, we have not had a bullish shock. So that's why I was saying, right, a change of character does not define where your swing high or your swing low has formed. It doesn't define when it has formed. It's just a tool that can signal that a pullback, a swing pullback may be starting or may be ending. It has nothing to do with defining where it is. For me, what defines where a swing low is in a bearish market is when it pulls back 40 pips. Okay, that shows me where the swing low is in a bearish market. Where the swing high is in a bearish market is where the highest point is that broke the swing low. Okay, so again, I'll say that in a bearish market, We know the swing low is once it pulls back more than 40 pips on the 4 hour time frame on euro dollar, because that's the rule that I've come up with. That's significant for me. Where the swing high is, it's where the highest point is that went on to break the swing low. That's in a bearish market. When we were back here in a bullish market, we know where the swing low is because it's always the lowest point here that went on to break the swing high. But where is the swing high? Well, the swing high is, we only know where it is once price pulls back 40 pips on the 4 hour time frame on euro dollar. Okay, so that's how you define the swing high and the swing low. It has nothing to do with change of character in terms of defining your swing points. You do not need change of character for mapping your swing structure. When we bring change of character in, is it can sometimes give us a signal where we can anticipate when that pullback may be starting, because the change of character can happen before price moves those 40 pips. Okay, so that's, yeah. And then in this circumstance, quite rightly you pointed out, we pull back 40 pips, more than 40 pips, and we know that this is our swing low, but we haven't yet had a change of character. So they're two separate things, but we bring in change of character to sometimes help us signal when that may be happening before it happens. But in this circumstance, we know where the swing low is before we got a bullish chart. Cool. Okay, so none of this is price action that we care about. It's just substructure, and then boom, we take the low. Okay, so that internal low goes, and we get a swing breaker structure. Okay, so there's a few things going on here. So when we get that internal low going, where is our most recent internal high? It's the last candle that failed to break the prior candle's low, which we can see it's this candle here, right? That candle failed to break the previous candle's low, so this becomes our new internal high. This is our internal low, which is put to the lowest point, right? We'll move this out of the way because this here was another breaker structure. Okay, so we know that that was a boss, right? This is our internal high because it's the nearest high. It's the last candle that failed to break the prior candle's low. This is obviously our internal low because it's, you know, it's all part of the down move. But where is our swing high? Our swing high is the highest point, yeah, that led to the breaker structure after it formed. So remember, get the box from the low, the swing low, to where it was broken, drag it up. That is the highest point that went on to break the swing low. Okay, so at this point here, for the 4 hour trend to switch bullish, we would need to see price break and close above this level here. So this is the swing range we're within. Okay, now we are forming a swing lower low, but I don't know where the true swing low is. I can't put on this, you know, fancy highlighter tool until we do what? Until we pull back 40 pips. Okay, so let's continue. Okay, now we take this low. Was that a 40 pip pullback? No, it wasn't. So it didn't quite move 40 pips. That for me is not a swing pullback, which means that this is not a swing low, which means that this break of this low here is not a swing breaker structure. It's not a boss. All that is an internal low being broken. Okay, so we move this down here and we move this to our most recent internal high. The last candle that failed to break the prior candle's low was here, right? So we're still moving to the downside at this point. Our swing high stays in the same place because we haven't had a swing breaker structure yet, right? This was not a swing pullback for me. It needs to move more than 40 pips in a bearish market. All of these candles break the prior candle's low. It's still part of the down move. Continues part of the down move. Continues down, right? Continues down. Put this on accurately. Okay, how big is that? Cheers, Roberto. See you in the next one, man. Have a good week. Almost done anyway. We'll be done in the next sort of 5 minutes. We'll wrap this up. Okay, this decided to freeze for me anyway, so it's really annoying. Okay, cool. So at that point, right, we move back more than 40 pips. So now that's, for me, counts as significant structure. It counts as swing structure for me on the 4 hour time frame on euro dollar. So I can now mark that out as my swing low, right? Now, again, our internal high stays in the same place. This for me is not a change of character, right? It's not a break of structure. This is not an internal change of character. That's not a break of internal structure. Why is that not a break of internal structure? Well, because it's not a high. Why is this not a high? Well, because it's all part of the down move. All of these candles continue to break below. That candle trades lower, that candle trades lower, that candle trades lower, that candle trades lower, and that candle trades lower. So that is all one bearish move, okay? Even if this here was a bullish candle, right? If it was a gray candle, it doesn't matter because it broke the prior candle's low, right? These are all one move. Hopefully that's really, really clear. So yes, you can, you know, view this potentially as you know, a bullish sign, right? The fact that price pulled back and the candle traded higher, but for me, that's just a substructure break. It's not anything that I care about. And this high didn't do anything. It didn't cause a low. This is just internal price action, right? It's substructure. Okay, so for there to be a bullish chart, that's the high that needs to go, right? So now our internal low and our swing low are again in the same place. So it's just one of those instances when price is quite a lot of momentum. Whoops, that's supposed to be our swing high as well. You know, it's just the way it is, okay? So what's going on? Okay, so now that becomes our internal low, the lowest point. We've got a swing breaker structure over here. So where is our highest point? Let's look at this low. It's this low here, right? This high here, sorry. So just gonna drag this over here. Cool. Has this moved 40 pips? Not yet. So we don't have our swing low just yet. All right, get all right. So you can see here, this is another instance where the internal high and internal low are the exact same place. So price can do whatever it wants in here, right? But none of this would be changes of character for me, right? It's all just substructure. Come on, there we go. Okay, so now the internal low goes. Now this movement, I'm guessing was more than 40 pips. Yeah, it was. So that was a swing low. Trying to do this quickly, but it's getting a bit messy. Okay, that becomes our internal low. That becomes a breaker structure. Yeah, that's the highest point. Okay, so that becomes our new swing high. So now we can put the highlight temple there. All right, this is our internal low. So where is our internal high? It's the last candle that failed to break the prior candle's low. So it's not that one. Yeah, it's this inside bar here, right? Because you can see from that point onwards, right? From this inside bar onwards, the next candle trades lower. Yes. Does the next candle trade lower? Yes. This bullish candle does trade lower than the prior candle. So it's not a pullback. This candle continues the down move, right? So from this inside bar onwards, these candles all trade lower. So this is the most recent internal high, okay? So that at the moment is the internal high that I would need to see go for there to be a 4-hour bullish chalk, okay? Right? So we haven't yet had a 40 pip pullback, so we don't know where the true swing low is just yet. Okay, so that takes the low. So that becomes our internal low. That didn't trade lower than that candle there. Okay, so that's an inside bar, right? So this would then have been our internal high at that point, right? I'll bring that back one candle. I went a bit too quick there, just so you can understand that. All right, so at this point here, that was our internal high because price came down, it moved up, and we ranged with these inside bars. It gets a little bit confusing. But essentially, this was the last candle that failed to break this candle's low, right? And then it's all part of the down move. Now, this candle here fails to break this candle's low here, okay? So now we're starting to have that internal pullback, right? So this is our internal low. Now, what happens if we play the next candle is price takes the low, it breaks that low, right? So as it breaks that low, in that exact moment that this low gets wicked, where is our most recent internal high? It's this candle here, because this was the last candle that failed to break that candle's low, right? But we need to wait for that low to be broken to know that this is the high, right? So once it breaks, that then becomes our high. But then in that very instance, with that same 4-hour candle, price then takes the high, right? So that's now what we've now had a chalk, okay? So this is where you have to really pay attention in the live market when it happens like that, okay? Because the low gets taken, which then means this becomes our high, but then the high gets taken in the same candle. Okay, so that becomes our internal high, and then this here becomes, get the line to work, our bullish change of character. Okay, and then this becomes our low because that's the lowest point, right? So essentially, it's one of those candles, I forget what they call it, like outside reversals or some nonsense like that, but essentially it took the low and it took the high in one go. Okay, swing high still stays in our place. Have we had a 40 pip pullback yet? Not quite yet. So it's getting a bit messy. Okay, now we take the low. So this becomes our internal high. And then internal low. Now this again, yes, this candle did break the prior candle's low, right? So you would say that's not a high, but you see how it's because that was an inside bar and then this is an outside candle, right? It takes the high and it takes the low. So for me, this becomes the most recent one because I can't take the inside bar, right? Yes, that inside bar technically was the last candle to fail to break the prior candle's low, but then what happened? But then this candle broke it. Right, so this is why then this becomes it for me, and then that's all part of the down move, right? And then we continue down. All right, so at this point, what we're waiting for is we're waiting for a 40 pip pullback to know where the true swing low is before that happens, okay? It's all part of the down move. All right, and then we start to pull back. Okay, and then we take the low again. So then this becomes our internal high here, could be this candle here. All right, yeah, and then still haven't yet had a 40 pip pullback, so we still don't know where the swing low truly is yet. All right, that's an inside bar, so we do pull back there. Don't think we trade lower. Let me check. Yeah, we don't. Okay, boom. Now we have a bullish change of character. So what I'm going to do, also, wait, hang on. So there's a few things going on here, right? So let's concentrate on the internal structure first. So we've had a bullish change of character, right? So I'm going to drag this line out the way, put a bullish chock here. So you can see in the live market, right? I'm not marking these internal highs and lows. All I do is I just know where my most recent high is that I need to see go for the bullish change of character, right? And that's the dashed line I would have. I would never kind of draw on these internal highs and lows just because it gets a bit unnecessarily confusing, right? So now we've had our bullish change of character. Where is our internal high? So obviously this point here at the highest point. Where is our internal low? It's the last candle to fail to break the prior candle's high. Yeah, so it's this inside bar here. So we now move this up. So essentially what this means is if price was then to come down and take this low, we would then have had a bearish change of character, okay? Now, because we have pulled back more than 40 pips, we now know with confirmation, right, that this is our swing low, right? The lowest point, which would be this low here. So again, I want to make this point really, really clear. Change of character has nothing to do with knowing where the swing low is. With defining where the swing low is, it has nothing to do with it. Okay, we only know in a bearish market where the swing low is once price pulls back. For me, once price pulls back more than 40 pips on Eurodollar on the 4-hour time frame. Okay, what change of character allows us to do is just it gives us another signal that that pullback may be happening because the internal structure is shifting to bullish to facilitate that pullback. Okay, sometimes what can happen in like a circumstance like this is imagine that this movement here, just say this movement was only 20 pips. Okay, so at that point, if this movement here was only 20 pips, I wouldn't be able to mark that as my swing low, but I would still have that bullish change of character, right? And now I can anticipate that potentially we are going to get that pullback, right? But I just want to make that distinction clear that change of character has nothing to do with defining where your swing low is or your swing high. It's just to give us an indication that structure may be shifting and we may be pulling back, right? So swing high obviously stays in the same place. We can now mark this out as a swing low. Just do this as our last example. Once this swing range breaks, we'll call it a day, okay? Okay, so now we have a bearish change of character. And again, right, I have a lot of questions about this. Okay, well, we had our bullish change of character. That can signal that the 4 hours pulling back. But then we got a bearish change of character straight away. So does that mean the 4-hour pullback is now over? And does that now mean that we're now going to come down and go and we shouldn't look for longs? Is that what that means? Well, no. Essentially, yes, it is a weak signal, and it does mean, in theory, that the 4-hour lower high could be in place and we're coming down. But you have to bear in mind that changes of character happen everywhere, and really what I care more about is have we come into a really nice demand level? Yes, we're quite overextended. We're still within the discount of the 4-hour range. We've had a bullish change of character. So yes, although we've now taken a low again, and technically that is a bearish chart, I don't really care too much because the odds that we're going to have that pullback more to premium prices are still quite high. So this is not ideal. It's still a weak signal, but I'm going to pair it with everything else. Right? I'm going to be looking at the daily. I'm going to be looking left on the 4-hour chart. I don't know what's there. I'd have to do it another time, but have we come into a nice level? I'm not necessarily going to let that bearish chalk put me off from potentially looking for longs from down here, right? It is a negative confluence, and I will be mindful of it, but I have to pair it with everything else, right? All of the confluence that we're using. So yeah, just to kind of put that clear, because I know it does confuse some people that they'd see that bearish chalk and they go, well, we can't look for longs from now. But yeah, it's not necessarily the case, but that is, yes, technically a bearish change of character. So potentially, yeah, we might go down from here and continue to make the low. Okay, and this is what I mean, right? Now we have a bullish change of character straight away again, and that's why they start to happen everywhere. And I don't care at this point. All I was waiting for was that first sign. Yeah, essentially, this is exactly what's going on the daily chart on Eurodollar at the moment, and I can see why that can be a bit confusing. And that's why I care about chalk mainly in the areas, right? If I know that I'm anticipating this pullback to kick in, right? What I really care about is this chalk here, not so much when we break down again and we break back up again. Use it as information, but this is the one I was caring about because I wanted to see that first sign that the internal structure is switching bullish. So now I can start to anticipate this move. Not necessarily thinking it's going to go all the way up here, but that's the one I care about. Now, if we pull back up here like this, and then we start to come up into the premium of the range, and we're coming into supply levels, and we're coming into an area of value where I want to look for shorts, and where I expect that lower high to form, then now I really care about change of character because it's in that area in which I want to start looking for shorts. Okay, so hopefully that kind of you're starting to understand now of, yes, there are chalks everywhere and you need to be aware of them, and this is a bearish chalk and it is a bearish confluence, but really, you know, I'm expecting the longs to go like here. It's more probable we're going to pull back higher. Okay, cool. Let's just, yeah, like I said, we'll do the swing range, and then we'll call it a day. So that continues the up move. All right, so that was our bullish chalk there. All right. Okay, that's an inside bar, so it's an internal pullback. Okay, now we've had a bearish chalk, right? It's a bit more significant at this point because we had a bit more of a pullback, right? We've come into, we tap these buy to sell wicks almost, right? Bit more of a significant pullback. So that, yeah, that chalk here, this bearish chalk, just mark this out of the way, I would probably see as a bit more significant than, you know, necessarily just this, you know, weak one here that we had straight away, right? It's not, you can see the difference, right? Now, where is our internal high? A bit more of a confusing example here because it's another one of those ones, right, where price came down, then we had a pullback, right, because this candle failed to break the prior candle's low. And then in this one candle, the way it formed, this is why it'd be easy to see in a live market because you'll see how it forms. It's a bit tricky with backtesting because the candle prints and one goes straight away, right? But what you would see is price would wick that low, right? So then you know, okay, now I've had a bearish chalk. So as that's happening, as price is literally down here, right, the 4-hour candle hasn't closed, you would then know that this is then your internal high, right? Because that was the last candle to fail to take out the low. So that was our internal high. And then as the 4-hour candle closes, right, price then moves up. So now you've had a bullish chalk and a bearish chalk all in one go. So technically, right, this is quite hard to see when you're back testing, but it's a lot easier in a live market. That would have been a bullish chalk, and then that would be your internal high, and this would be your internal low. Okay, so it's pretty messy. And again, this is exactly what's going on the 4-hour chart at the moment, right, where we're just taking highs and retracing, taking lows, retracing, right, taking lows, retracing, taking highs, and it's just messy. And that's why I'm not reading too much into these chalks, right? I don't care about that so much. I'm using it in those areas where I'm expecting price to turn, okay, and when it comes up here, etc., etc. But let's just keep going. Okay, boom, and then we go. So that would be our internal low. This inside bar was the last candle that failed to break a prior candle's low, so that's our internal high. We've now had our swing breaker structure. Okay, that was our boss. Right, we continue the movement. Whereas our swing high, yeah, it's the highest point that wanted to break the low. So this becomes our new swing range that we are within. Okay, so yeah, I kind of wanted, my aim with this meetup webinar, whatever you want to call it, was really just to kind of just zoom into price and really just understand the exact mechanical process of understanding how to map internal structure, how to map your internal high, your internal low, depending on whether we're bullish or we're bearish, how to understand where the true swing high and true swing low is, the way I define it, and then a little bit of how to pair them together. We haven't really done that too much. I kind of wanted more to focus on the exact process of literally how you draw the line. In future meetups, I think what we'll spend more time on now, like hopefully you guys watch this as many times as you need to really understand the process. In the future meetups, we'll kind of look at examples of, you know, kind of more how we build trade ideas around it. You know, really kind of concentrating on the areas in which I'm paying more attention to those changes of character, and you know, so on and so forth, rather than, you know, all of this kind of mess in the middle, and then it'll really start to make more sense. But we had to kind of do this, obviously, you know, in line with the course lessons as well. That's all in there. But I kind of wanted to spend, you know, we've done towards 2.5 hours now, kind of going through the bar replay. Hopefully that's made this a little bit more clear. Like I said, watch as many times as you need to. If you do have further questions, you know, feel free to ask me. But hopefully, as far as I'm aware, these two methods of defining swing highs and swing lows and drawing your internal structure can be programmed into an algorithm. Obviously, to get to the point where I came up with the 40 pip rule, I did have to use discretion, right? What I did, I've talked about this before, is I just went on, I just drew everything on that to me looked like significant structure. And I realized that none of them were really less than 40 pips. So I just used 40 pips as my rule. And now I just keep it nice and consistent like that. You know, sometimes like here, this section of price action here, it's not really that clear. It's not that great, but just be mechanical. It's decent enough. It's 40 pips. That for me is a swing breaker structure. Okay. You don't have to use 40 pips. You can use whatever works for you. But that's the rule I use. So once I have that 40 pip rule, now it's 100% mechanical. Now it can be programmed into an algorithm. Now you have complete clarity. You know, you don't have to and ah about it when you're in the market. But yeah, I'm kind of ranting a little bit and rambling now. So if anyone kind of has any final questions purely just about this stuff, I don't kind of want to go into too much other stuff just yet. We can save that for future ones. then yeah, now's your time to kind of type one in, or just unmute yourself and shout over me. Cheers, man. I hope you guys appreciate it. Some of you probably are asleep, because I realize this stuff is very, very boring, especially when you're literally just trying to, like, we're literally just mapping it, like I said. But I personally get excited about it when it all clicks, and when you can pair it with how we start to build trade ideas around it. Because when you have it this way and you really, really get it, you come to your charts every single day, every single morning, and it's like the first thing I do, right? I go, where's my swing high? Where's my swing low? Obviously, I already have it mapped out from the night before, but just you can just see it. It's clear. I know what I'm looking for. And obviously, when it comes to building your guys' trade plans, and when you're really looking to start to take positions, this is where, you know, we'll talk about this later, and I really tell you how you can make it mechanical, how you can build those rules in. Okay, when price comes back to this 4-hour zone, I need to see X, Y, Z. I need to see that M15 shock. I need to, or maybe I don't. Maybe I only need to see an M1 shock. And you can go from there. And it just means that emotions are going to be minimized. You're going to have that clarity, and it'll make things really scalable. And then obviously, when you get to that point where you feel a bit more comfortable, you guys have got months of this under your belt, you know, even years, right? And you've seen so many price action examples. You're going to start to get a good feel for, actually, you know what, I really like this. All I need is an M1 shock. Other times you go, actually, no, I don't like this. You know, I want to see a bit more. I want to see either an M15 shock or an M15 boss, or you want to see a clearer sweep. That's where it comes in with time and experience, okay? But when you're first starting out, try and have that super, super strict trade plan that literally, you know, you could give it to almost an 8-year-old to almost execute. They might not understand what's going on, but at least they would have the rules there, right, to read and put it down to. And then as yeah, like I said, as it comes with time and experience, that's when you can, you can just bring in that discretion. I'm repeating myself now, so I'll stop. But yeah, exactly. Yeah, S&D zones premium discount. Yeah. So cheers, guys. Yeah, like I said, hopefully you guys did appreciate it or took value from it. So I think I'm kind of just brain dumping on you guys now and thinking out loud. But I think the next one we'll do, we'll kind of bring in another time frame. I think what we'll do is we'll do the 4-hour and the M15 together. We'll just look at 2 time frames, because in my opinion, they're really all you need in terms of structure. Yes, I obviously use the daily and the weekly, but that's just to give me a bit of, obviously, of an extra edge. But if you just have the daily and the 4-hour and the M15, there's those 2 time frames. And again, you guys can use anything you want. It doesn't have to be the 4-hour and the M15. It could be, you know, the 8-hour and the 28-minute, whatever works for you. But we'll just look at kind of how we pair 2 time frames together. And then we'll slowly bring in supply and demand, and we'll start looking at those trade opportunities, and we'll get a little bit more advanced. But I think because we had a big influx of members all kind of at the same time in the last 2 or 3 weeks, not all of you, but a good chunk of you will kind of be at that similar sort of level of experience, or at least experience with, you know, the photon concepts and the way we use them and the way we look at them. I think it's kind of good to try and take you guys on that journey at a similar level. So I appreciate for some of you it'll be a bit frustrating and you want to kind of get into the more juicy things, but yeah, it'll be worth it to go from there. But yeah, it doesn't look like we've kind of got any more questions specifically on this stuff. So what I'll do is hopefully the recordings worked, and I'll probably put this meetup into the actual market structure bit of the course, just so it's full there and it's in there, and there's a bit more examples. But yeah, if you guys have sort of anything that you think still isn't clear enough or whatever, feel free to shoot me a DM if you want to see more content on anything like this. Because obviously in the course, I don't want to make those course lessons hours and hours long, because it will just, some people, you know, will just be like, oh, this is too much, they'll never get through the course. And it's kind of what these meetups for, where we can then just, you know, spend like we have, spend 2.5 hours almost painfully going through it. So I once heard a trader say he will analyze on a Sunday what the next week's weekly candle will most likely do, and then he has a bias set. What do you think of that? Yeah, I mean, sure, you can do that. There's so many, you know, little nuanced ways in which you can do things. You know, personally, you guys kind of see it the way I do it is I look at the weekly, I look at the daily, I look at the 4-hour and the M15. I look at where my swing range is on each of those time frames. I look at where the nearest supply and demand zone is on each of those time frames. So if we go on do I have on the you know, you guys see him, I do my weekend analysis. Like, this is as complicated as I try and make it. Like, I know that we've had that weekly break of structure. We're now playing within, just going to get rid of this blue line because it's killing my OCD. There we go. All right, cool. So we're playing within, oh, come on, go away. Things in my, there we go. All right, we're playing within this weekly range, right? We're coming into a weekly demand zone. yes, I could, start looking at the weekly candles, anticipate what's going on. But the way I see it is, we're pausing in this demand zone. We could have a bit of a deeper pullback, to either this POI or this POI here. We put up a lot of those orders. We haven't really moved. We're probably going to dump lower. That's as much as kind of my personal weekly forecast needs to be. I know where my nearest POIs are. So if we start to pull back on the lower time frames, as the 4-hour switch is bullish and the daily gets those changes of character, then I'm going to be anticipating that weekly reaction. Okay, so where are my nearest weekly POIs? Well, we have this buy to sell wicks here, not really that significant at all. This doji looks a lot better, right? But again, not really that massively significant. But they would be my nearest 2 weekly POIs. But I'm also aware that, we haven't really gone anywhere. I'm ready to kind of dump and look at this next target, right? That's as complicated as it gets. Daily chart, I know we've come into the extreme demand of that weekly level. We have had, we're pretty overextended, but we are heavily bearish. We've had a bullish change of character, right? Because we've wicked that high, but we also had a bearish change of character because when we took that high there, where's our most recent internal low? It's this low here, right? Because we had an up move, we had a down move, and we had an up move, right? So that's our internal low. So now we're ranging. So we're just stuck within this range. So that's when I don't read too much into that bearish change of character. I don't really care about it. More just I'm expecting potentially we're going to pull back into premium, into the supply, but keep it simple. Everything's bearish. That's a weak low. I'm expecting the path of least resistance to be to the downside. That's it, right? 4-hour chart, what are we doing? Well, the 4-hour chart's bearish. So this is where I'm paying, I'm putting really massive more attention to this now. This is where, the 4 and 15 to me are like, boom, that, you know what I mean? My range of English vocabulary is poor, but yeah, hopefully you kind of realize what I was trying to say there. So we have a 4-hour breaker structure. Cool. Now we're playing within this bearish range. If the 4 hour is bearish, I'm just going to keep assuming that 4-hour trend is going to stay bearish until it isn't. Yes, the daily's coming off a level of demand. Yes, the daily could pull back up higher to the premium. So could the weekly, but I'm not going to get too fancy with my forecast. If the 4 hour is bearish and all those time frames are bearish, let's just assume that this high is going to be protected, and this is a weak low. I'm going to be favoring shorts the entire time, no matter what. That doesn't mean I won't take longs. It just means the shorts are the trade I want to be in. But obviously, this is a very, very horrible range. By drawing the, you can just see we're chopping in the middle. And whenever it's like this, I mean, move sideways for a long time, the middle is no man's land, right? It's not where you want to be. You're going to get bullish and bearish changes of character constantly. And this is just where all the low probability trades are, where we sweep liquidity below the low, sweep liquidity behind the highs, right? Sweep liquidity below the lows. We just keep retracing, right? But failing to close below even these substructure lows, right? It's just horrible, horrible price action. You need to be very, very nimble and just understand what I appreciate I'm going on a massive tangent now. It's not what you're asking me, but that's kind of the way I do my analysis on the weekend. It's know what time frames you use. Keep it at a minimum to 2 at the start if it's confusing. Have your 4 hour, have your M15. At a bare minimum, know where your swing high is and where your swing low is. Draw on your nearest demand zone and your nearest supply zone, ideally at the extremes, right? And then you do that same for the M15, and then you just know, well, ideally I want to be selling from up here because this is in theory a strong high, right? I don't really want to be buying from down here because this is a weak low, but potentially intraday, if we get some nice setups, I could trade a reaction from here. It's a bit more advanced, but the easy trade is going to be up here, and we're targeting this weak structure. And that's it. Obviously, it can get a bit more complex than that, especially when the M15 is playing in a massive range, right? Technically, this is the massive range we're within, and there's all this substructure and internal structure within. And it's complex, especially for you new guys, right? This is like, what the hell do I do here? And this is where I would say just sit in your hands for December, be patient until we have clearer trending price action, right? Where, like the examples we looked at in this webinar, where it was, a lot clearer. Whereas all of this is weak structure. All of these highs and lows failed to make a swing high or low. So I expect all of them to get run. And when it gets like that, that's why it gets very, very confusing. It's like internal structure. It's hard. And that's why you're seeing the price action that we're getting, because until we break out of this range, it's not high probability conditions. So yeah, have you time to see some not clear liquidity sweep? But it's not important. Yeah, I don't want to get too bogged down in liquidity, because that's kind of the last thing we'll look at. But if you shoot me a message, we can have a bit more of a discussion about that. I don't want to get into that just now. Let's take it one step at a time, because liquidity is really like the last thing really we want to be thinking and looking at from my point of view anyway. But yeah, all right then. Appreciate it, guys. Thanks for you guys who managed to stay to the end as well. 2.5 hours is fair going, especially if you guys in Europe towards the end of the day. I'm sure you've had a long day at work or trading and whatnot. So yeah, appreciate all of your attendance. It's good to have you all in here. Hopefully this recording has worked, so it will be up there. Watch it as many times as you need to. Yeah. Also, if you have any requests for kind of like big sort of feature topics like this, bring them in. But yeah, I think we will spend at least the next few ones still focusing on market structure and slowly bringing in, you know, multi-time frame analysis, bringing in supply and demand zones, and then we'll eventually dig down into entries and all the fun stuff. But yeah, it's really, really key to get this going. So yeah, with that said, I don't think there's any more questions come in. So forever hold your peace, and I'll see you in 2 weeks' time. I need to double check what exact date that Monday is, because obviously we're getting nearer to Christmas and stuff, so we'll figure that out. But yeah, we'll definitely do something. But yeah, cheers guys. Hope you have a good week, and I will see you in the next one. Peace out.
Look, lads.
Cheers, lads.
Yes.